Hello, 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 everybody in the chat. It is I, AXisALiVE, here for your bidding. Big shout out to Markable for producing that intro. It's pretty sick, eh? I am very, very happy with it. I'm just reading the chat as we go. I brought some friends with me today. We're going to do some deep dive into some charts to start, right? Well, probably do a brief, little segment on charts, and then we'll go into what you're all really here for, which is the Gigabrain data analysis crunching, courtesy Crypto Sloth and Chrispy man from Hexfire.io. So yeah, we could work something out with the autograph and the WhatsApp. I'll have to do a signed message or something. You might have to send it to my wallet first. Just kidding. Don't send anything to my wallet. All right, guys, I'm bringing you on.
What's up?
What's up, gentlemen?
What's up?
Ballin'.
Good to be live.
Feels good.
It's good to be alive.
We are AXisALiVE.
I do like that.
We are live with AXisALiVE. Dude, I'm liking the new intro, man. It's pretty dope. Shout out to Markable, like you said.
Thank you. I know he also did work for you, right?
Yep.
Yeah.
Yep. That Hedron animation, that was all him. And he did that all on his own and gave it to me for free. So, he's a man of the people, man of the community. I appreciate him.
Sweet. Does he do his own music?
Actually, his brother does, I think.
Yeah.
But in this case, Candace actually found that music online somewhere.
Oh, nice.
Yeah.
And actually, a quick shout out to his brother because he did the music that I play over that animation too. So their family's just making all the production for me. They're doing all the stuff for my channel.
If I'm not mistaken, I think I'm pretty sure his brother did that professionally, or still does do that professionally. So music production and video production and all sorts of cool media content.
Steak and chill.
Yeah, so hit up Twitter. On Twitter, if you're watching this is your first time getting exposed to this stuff, check out Proof of Beards Only One on Twitter. If you're looking for any kind of videography,
that stuff's way professional. Mm-hmm. I'm still using a paintbrush on Paint, and not 3D, man. I'm using Paint.
Yeah, I'm pretty sure we went deep on that the other day on Wednesday in that stream. We were talking about the paint. Everyone started with paint.
Yeah.
Right? Some people never evolve from that. But it's no beef on you though. It's just the way it goes sometimes. You had other callings, right?
That's right.
For sure. Well, so anyways, I just want to say appreciate you guys for joining me tonight. This is obviously an important stream. We're basically going to be breaking down a lot of the deeper data on that's provided through Hexfire and Hexfire.pro. And we together, the three of us now, we've come together to kind of create a whole new suite of tools for a whole new class of investors that's going to be looking to get exposure into the Hex smart contract. And so if you're tuning in for the first time, or even if you've been here for a long time, I think we have stuff planned and charts that have never been seen before, and it's super exciting getting to work with these guys. And I just want to give them a bunch of credit because I feel pretty privileged because I can have an idea in my mind, but unless these guys help me flesh it out or actually do the development side of things, it would never come into fruition. So I just want to say thank you guys. Appreciate it. It means a lot.
Thank you, man. Yeah, thank you, man.
The FOMO is strong. I know I mentioned to you already, but I think in this stream, my friend saw me. You saw me. Right?
He's my friend too. I know
him. He's everybody's friend. So he was talking 1600x. So when we're looking at these charts, you see an opportunity to point out when 1600x might happen. You mentioned it. Because I want to see on the chart when that's going to happen. So I do it. I'm laughing in a way because I believe it's possible. I not think it's not possible. I believe it is possible. But I'd like a little bit of warning.
Yeah, well, I'm giving you the warning right now, but it's which point you're talking about. Close your eyes and throw a dart. You probably be landing on a 1600x on one of them.
Yeah. Well, yeah. Well, I guess probably bigger picture, right? We could say within the next 3 years, right? If it's going to happen, it's going to happen within the next 3 years. How soon? Don't know.
Are we talking Pulse, PulseX, or Hex, or all three, or one of them, or what are you thinking?
Well, I like them all. I think actually he was talking about Pulse.
Yeah, he was talking about the Pulse.
I just stole the idea because I'm thinking, man, if Pulse does a 1600x and Hex is going to do a 1600x, and I was like, no way, that can't happen. There's no way. So I was going to
Well,
post a smart comment on his video saying, "You're crazy, Sami." But
We've seen it before, man. We've actually,
I
for some
know.
of us, we lived through it. So it's definitely a possibility. Layer ones, go ahead.
Yeah, I said you had a nice little exchange with him. I was reading before the stream with Sami on Twitter, talking about the Bitcoin fractals, and I think he's said something along the lines of like the fractals will probably overestimate to the upside in the bull market, but at least like PulseChain and Hex will do what Bitcoin did in 2017, which was like probably the most generalized euphoria that Bitcoin's ever seen.
Yeah,
and if that's what we have in store for us, that's pretty nice.
Sami, shout out to my friend Sami. He posted this chart basically describing how we're basically reliving 2015 all over again in Bitcoin's price action. And you can see the obvious similarities between these charts. It's pretty clear to me. And it should be clear to you too if you have any sense of pattern recognition. And
hey, is it possible to experience all four of these emotions at the same time? Yes.
Oh, yes. Absolutely.
All at the same time. I'm capitulating in anger, man.
And I'm in disbelief that right when I hit the sell button, the fucking goes right back up.
I'm hoping my disbelief isn't real. So keep going.
So I think then to what Sloth was talking about is I came back and I was digging through some old stuff on Telegram trying to clean out doing some house cleaning, and I found this old chart that I made. This post is from May 11th of last year, and I basically had this fractal drawn where it was the 2015 fractal, and the price of Bitcoin was roughly at 31,000. I had initially posted a similar chart when we were at 36,000, that very similar to this, that we were coming down to the 20,000 level, and then sure as shit, here we are. It's early 2023. It's March now, and we're coming back down to do our final test of our base before we start to build structure and come out of here. And I think there's a lot of things going on right now in the global economy. One thing that I recognize is like with these failures of these banks, I think people that are already in crypto, they understand that the future is in crypto, right? I don't think you can really shake people of the idea that Bitcoin's going. I don't think people can really think that Bitcoin is going away, so to speak. I think that notion's pretty much dead in the water. But so then if you're looking for an opportunity and you're a large player, you go seek returns of 100%, 200%, 300% returns in something like Bitcoin that's got trillions of dollars of trading volume a day, or hundreds of billions of trading volume a day, or however much may it be, depending on what part of the cycle you're in. And so this is basically just setting up for a flight away from the dollar dominance and into an asset that's actually going to provide a return. If you've been listening to me for a while, I've been basically harping on that the dollar is at its death blows from the blow off top we had last, when was that, a few months ago? I think it was like back in December and November. We can pull that up in a second, but before I do that, we'll just mention here that the comment that Sami made to what Sloth was saying was how you wouldn't really get this kind of price action at the upside again, right? And the reason is because the market's a lot heavier, and honestly, if you're trading to get the price chart back to 60 grand or let's say 90 grand, the returns from 20 grand, if you're trading, billions of dollars, right? If you're buying $1 billion of Bitcoin and you realize a 300% return, you just 4x your stack, right? It's like you just made 3 billion on $1 billion. Like that's insane returns, right? So the chart doesn't have to do these kinds of moves anymore to be valuable to big investor class of people.
Yep. The euphoria for them is on the 2 to 3x because they're going in so heavy.
Correct.
Yeah.
And that's really go ahead.
I was going to say, because otherwise I got to wait. To get the same kind of 2 or 3x, they got to wait 3 decades, in traditional finance.
Right.
Yeah.
And I mean, this is like as short of a bet as you're going to get at a 3x in a couple of years as you are in Bitcoin right now. And so when this type of reality sets in on this bottom, right? Because that's where we're at right now. If you look at ETH, it's created a spring in the last few hours. It broke down, created a spring, and now it's busted out the top of the triangle already, guys. It's like this is the kind of price action I look for when I'm looking for like a bullish accumulation under a key level, a retest, and a resumption off that level. This is the type of trade action you were looking for. Same thing with Bitcoin. Right now, it's currently testing the top of the triangle. So ETH is a little ahead of it right now, right? And we all know this because anyone who's watching this stream knows that Ethereum is the better investment because it's not rocket science, right?
Yeah.
You know?
Easy. To all anybody who's asking, like, don't even waste your time with Bitcoin. Just go straight to Ethereum. Like, there's no point if you're new coming into the market.
Yeah. I mean, we can obviously, place our opinions even more higher on that with the, Hex.
Hex, yeah.
Here we got the dollar. We had a nice run up off the lows on the dollar, but now look at, we have a Bart Simpson pattern on the dollar, guys. This isn't looking too good for the dollar right now. This is the 15-minute chart. So this all happened today, when those banks collapsed, when Bitcoin broke down, when ETH broke down, the dollar broke down with it. So everything broke down at once. Now we're finding out which one is the fastest horse, right? Which one is one that's going to get up the fastest. This is not a good pattern. This candle closes in 32 minutes. This is called a shooting star. This is a bearish reversal pattern. So it's like, you saw one here. This is not looking good for the dollar. And this is exactly what I've been calling for on those longer time frames. You look at a monthly, you pull up the sentiment oscillator. This is a good example of where to use this indicator. ASO, average sentiment oscillator. Anytime that you get, so you look at the bottom panel here, anytime you get the red line, it means bearish sentiment is entering the fray, right? So anytime you get a huge spike up on bearish sentiment, that marks the end of the upside on the dollar move. Right? So like if you pull up the dollar chart and price, each one of these moves on the dollar has basically the dollar posts up, but this is the signal. The signal is in the red line. When the red line flips up, positive slope, that marks the death of the dollar for some time. And this is always signified upside in crypto. Here, 2015 bottom, here, 20K Christmas for Bitcoin, here, 2020, 2021 bull market for crypto. H1 was signaled months in advance by this red line flipping up. So we're already there, guys. Like this is the end of the dollar, blow off top. We're just waiting for this stuff to play out. At best, the dollar can try to like squirm sideways for a little bit of time before you're going to see people flee the dollar because it's an inflation risk, man. You're sitting on something losing its purchasing power every day, right?
Yep.
And so
you're only holding it to spend.
Mm-hmm. And you know what other thing you can look at for confirmation of this idea is if you look to gold. Look what gold did today. Gold is an inflation hedge, right? It's the oldest, soundest money out there. And look at the pump off that key level. I've had this key level, this white line drawn in here. It's pretty simple if you just divide it up. Half the move here, half the move here. Oscillation of that line, half the time. Key breakdown, break up, consolidation above that level. This is setting up for new highs on gold in an inflation risk environment. So, even let's say look at the stock market. I haven't looked at this today. So this is interesting. Stocks are breaking down. This is very interesting. This must be due to the contagion of the banking sector that's breaking down right now. Potentially. This is a composite index, so this is 4 different stock indices. If we break them down even a little further, it's still safe so far. S&P is just coming back to test this round. This is the same exact play that's happening on Bitcoin right now. If I pull up Bitcoin, it broke out, consolidated sideways, coming back to test the upper trend line. Pull up Bitcoin. I thought I already had one drawn. Okay, so I'll just do it quick. Parallel channel, bam, bam. Switch it to a weekly so we have more resolution. Okay, you can see here now clearly that we're just getting a retest of the upper trend line, same as the S&P, right? And so again, there's a lot of signs of confluence right now in these markets that, you know, inflation's basically priced in, right? And now the people that gets hit the worst and the hardest is the middle class or the lower middle class that's just sitting there fighting paycheck to paycheck. But if they default on their stuff, who cares? The banks don't care because they can just go ask for more money to like cover it, and then now they have acquired assets, right? So they just steal your assets and they kick you to the curb, and it doesn't really hurt them as much, right? And, you know, to a point. So definitely interesting. BLX, Fred, and WMN. Oh, you want to see that chart? Yeah, I can show you that quick. It's interesting. The Bitcoin versus the money supply. This is like an inverse head and shoulders pattern. So this is actually a bullish reversal pattern. So if you go to like a monthly, you can see how this is Bitcoin, right? But it's against the amount of dollars that exist. So it's the price of Bitcoin versus the total inflation effectively. We've never made a new high since 20K Christmas. This is when Bitcoin won the game and broke the entire financial system effectively. And it's been the same play played over and over and over again. This is the 14K summer, 64K top, 69K top, you know, low, lower low, higher low, triple bottom. Now it's going to start to trend up and go test that for, what is that now, the 5th time? The more times you test a level, the better the chance you have to break it. So eventually this will break trend, or it won't break trend, and this money that's coming in will flow into other things, right?
Yeah.
There's a lot I could basically expand on. I think one thing we should probably look at is the hex chart, because we do have a lot of hexes.
A couple people like that asset.
Yeah, we're getting a nice, again, like just in the same way that I showed you earlier, like Bitcoin was coming off of a spring. Hex is coming off of its own spring right now. They all kind of broke down together. Now it's breaking out. It's got to get, Hex has got to get above this key level here. Test and go. Like even if you get up, you break it, resume, test it, and resume off. That's what you're looking for to start breaking out of those upper levels.
What's that?
What price is that at?
The price is at 5.64 cents.
That line that it has to flip to support. What is that at?
Yep. Well, 5.65, let's say.
Oh,
Is that the 350-day moving average? It's probably
I'm gonna need to
close.
I'm gonna need to pull up a different chart to pull that up. Let's see.
That's my favorite chart. I know we dip below that. At least I thought we did.
I don't even get a 350-day moving average on this for some reason. That's weird.
Okay. Yeah.
I was just wondering if that level you're saying we got to retest for support to move up corresponding to any key liquidity levels.
Yeah, it
That's what I was
does. I'm going to bring that up. So yeah, here you go. Here's your 350-day moving average. But this is the V1 pair, remember? So this data lags because nobody trades a V1. More than likely, because like right now this is saying prices at... So there's a lot of nuance to the analyzing this hex chart, because you're using three different charts on potentially up to like 12 different liquidity pools, potentially, right? So this chart lags slightly, but right now this is saying 554. So you're playing with the 350-day moving average right now. And you're also playing with the middle of this rising channel. So if we zoom out to a little bit, you can see that we're basically testing this line as support, and it's actually confluence with the 350-day, right? And this is basically going back to your pre-big payday run up, your big payday top, your big payday low, and then your New Year's top of 2 cents, and then you're consolidated above the midline. So we're basically coming back to see, can we hold this as support? And its confluence is in that it's testing the 350-day at the same exact time. So if this holds, I mean, you could get a 2x in hex price in short order, right? So let's go look at those liquidity pools and see how that looks.
Not the 1600x quite yet, Chrispy man, but you know, a nice little jump.
2x, 1600x.
It's a rounding error.
Yeah. Well, at 2x, it's only 800x to go, right? So
You want to answer that question, Sloth, from Alfred?
Oh, yeah. So he says, Bull Run, do you see a feeding frenzy around the HSI marketplace as prices go up, or a lull towards the top until we get better deals and the next cycle equal big payouts? Let me think. So I'm a little confused on what you mean by lull towards the top until we get better deals. But in terms of like, do I see a feeding frenzy around the HSI marketplace? I do. If people aren't updating their, well, I guess there are two marketplaces: the secondary market on like OpenSea, and then like the liquidation auctions. So if it's on OpenSea and people are not updating their prices as Hex moves up, I do see people going there and scooping up those prices. If you're talking about the liquidation auction, I also think it's the same in a similar way, where more Hedron is going to get burned because the price of Hex is going up to a limit. So because not everybody has a lot of Hedron, as the HSIs get larger and larger, they're going to go for more and more of a discount because there are less and less people who can reasonably compete for them. So it's kind of like yes and a no. So like the 1 to 10 T shares, those are going to be going pretty well. But as you start getting to the 50 and 100s, the discount might still be somewhat similar to what we're seeing now, even as the Hex price goes up, because not everybody has 40 to 50 billion Hedron to burn for a 15-year stake. There are only a few people, pretty much the 10x minters, who are able to do that. But hey, that's good because they're not dumping that 60 billion Hedron on the market, and they're getting some discount Hex for it.
Yep.
We got another question here from Abit. He says, if we speculate on RH timing the market, wouldn't it be smart to launch Pulse before the last rinse to flush out non-believers? What do you guys think?
I think we're going to flush out non-believers no matter when we launch. I think there's a solid subset of people who are ready to exit. People who we've already seen exit Hex, like that one wallet that's been dumping tens of millions at a time, completely emptied their wallet out, and they are one of the top 10 sacrificers. So we have people who I think no matter when Richard Hart launches it is gonna flush out their toilet paper hands. But like Abit was saying, yeah, ideally, better to launch when things are bad to get out the people who don't believe. That's always ideal. Yeah.
What do you think, Chris?
I don't think they need to be connected, like the two ideas specifically connected for that reason. But I get Abit's point, about doing it. The statement as read kind of makes you think, there's gonna be a last rinse, a last down cycle, which could happen very much so. I don't know that I would want to launch Pulse right before that happened. I might want to launch right after it happened.
Mm-hmm.
Yeah, we'd really have to assess the Bitcoin chart and what we have historical evidence of, which was what happened with Hex, right? So yeah, I'll pull that up while you're finishing your thought.
No, yeah. So that's kind of what I was thinking. I might want to do it afterwards. Now, that being said, right, definitely one of the possible scenarios, regardless of when it launches, is we're going to see that type of a huge dip or dump on Pulse. I'm not saying it will happen, but it's one of the scenarios that can happen.
Mm-hmm.
So this is where we launched Hex. It was a triple bot. He actually the coin launched. I mean, this was planned months in advance, but the coin launched at the triple bottom on Bitcoin. You can see that same thing that we saw on the Bitcoin versus the money supply chart. You can see here, it's a triple bottom, and it was well timed. If you didn't get the unpredictable COVID event, I mean, you would have effectively launched the bottom of the bear market. Mm-hmm. So it's not perfect, but yeah, I think it's reasonable to think that we're already close enough to the end. I mean, look at this wick right now on this candle. This is a very bullish. This is called a hammer. When you get these kind of candlestick patterns, remember this candle closes in 19 minutes. If you can get this to even flip green, it's even more bullish. So I'll just for example, we'll just pull it up.
That was the Bitcoin daily chart, right?
I think so. Yeah, it's the daily. So here's your hammer candle. Hammer candlestick. It comes at the bottom of it's a reversal candle that comes at the bottom of a trend reversal. Same here. You can see it. Hammer candlestick pattern. If it flips green, it's even more bullish, but it doesn't need to necessarily. You know, because we're fighting the FUD right now, so it's already proving itself by, again, what that candle translates to, and the 15-minute is this awesome structure, right? This triangle structure that's breaking out. So the price comes down and it consolidates below my downtrend, and then it's breaking out now, or it's testing to break out. What you want to see from a trader's perspective is a breakout, a retest, and a resumption. And this is where a trader enters a trade, and then that takes prices much higher. So we'll go back to the daily. You can see the wick and the hammer. It's printing. The weekly ends on Sunday night. So if this holds this for a couple more days, again, that's a really good sign. You're holding this trend as a consolidation above a previous resistance. So this ends up becoming a down sloping support. It's not the best kind of support, but it's still support. It's meaning that the demand is increasing and people are still fighting over the best price. People are accumulating Bitcoin in anticipation of the halving, which is about 380 days away. So typically when you see that reaccumulation, this is the same as 2015. If I pull out this fractal quick just for experimental reasons, I'll copy this, pull it out to here. This is 2015. You can see the similarities here. I'll make it nice and bright so we can see. So it's similar. You get the low and then the test of the high and a breakdown, some sideways action. This sideways action came sooner than it did back here as far as time frame, but it's effectively the same thing. You're just coming back down to retest that base. So as long as this base holds, that's it for the bear market for Bitcoin. You're not that far off. You're percent-wise, you're about, hold on, turn off the magnet. Like max downside 8%, right? But you kind of got that on the wick, so it's exciting, man. It's we're getting to the end of the road here. This is a crypto spring, man. This is no longer the bear market. If you think this is still the bear market, got news for you. The price action is completely different now. So, anyways, back to the liquidity analysis on Hex. This is your price support here between basically from these big bands here at 3.8 cents all the way up to 5.4 cents. So we're not saying that we're out of the woods 100%, right? What we're saying is that so far price is being supported above the liquidity bands because if two things occurs here, either a massive seller comes in and sells into the liquidity, and a large player that wants to exposure will immediately buy this back up where there's literally $6 million resting, and just accumulate all that supply up, or the price goes into here. The farther it goes into here, whoever's providing this USDC as liquidity ends up with Hex. Then they pull the Hex position off market, which completely evaporates the supply. Because then let's say we'll go to a new tool that I had Chris build for us. It's a liquidity indicator tool. I think this is the first time I've showed it publicly. So let's sort of break this down for you guys. There's currently 130 million Hex and liquidity pools, but just before we started the stream, there was like 138 million. So it tells you how quickly 8 million can get soaked off market. It was literally we started the stream up, 10, 20 minutes ago? Oh, it's been a half hour.
But half hour, man. Time flies.
Yeah, so in a half hour, 8 million soaked off the market. And the red stoplight represents like we're in a FUD environment. So until we recover some levels and this liquidity gets back under, let's say 70 million or 60 million, then we get back more to a neutral market where we let the market take over. FUD can also be FOMO. So like FUD and FOMO are interchangeable. So if some guy's providing liquidity and this gets up to like 200 million in the pools, and the price falls down into like that 5 and 4 cent support range, which right now it looks like it's doing the opposite. So like again, this is kind of sucks because now it's like, oh, shit, well, that's not going to happen. So they can't even pull the hex out of the pools because it didn't fall far enough, right? Because it fell into the bands and then it was supported. And all it took was $320,000 buy here to get this thing rolling. Not much. We had a big injection yesterday. It was 700 grand at the pink line here. And this pink line is the key level. This pink line is basically the 5.2 cent level. So it's 5.2 to 5.4 cents is where your price is consolidating. It's a key level here before the breakout where we wicked all the way up to 8.5 cents on some. And now you're just coming back through. If you can get back above here, that's super, super bullish. And again, if you break down, that's kind of bullish too, unfortunately, because I say unfortunately because of how little the whales are going to get to accumulate, because of some big player is going to pull liquidity, I assume, if you fall into those bands on here. They'll just either pull the liquidity off, they'll just pull the hex off market, or some big Genesis whale step in and buy it up. 100 million, right?
Well, like this is pretty good timing. Somebody just typed in the chat that somebody just bought 2 million, of hex off the market, and so now the liquidity ahead of us, right, at the higher prices look like they've gone up. It's gone up a little bit as we've been watching the charts the last couple of days, because this changes minute to minute, right?
Mm-hmm.
It appears that there's more now, and maybe it's my imagination. There's more now that would support the price going up. Does that make sense? Yep. So just looking at that amount, that there's more supply now, that somebody could come in and be a big buyer that maybe is a little bit more impatient and is okay with taking some slippage.
Mm-hmm. I agree.
Yep, 100%.
And I have this really cool website. It's called Hexfire.io. I can pull up some data from here to show you guys some proof of what happens, right, in these kinds of situations. So if I take a screenshot here,
I've never seen this before.
Dude, this is you got to meet this guy sometime. The guy that built this.
Who made that? Who made that site?
Right, I want to get to know that guy. So check this out. I've brought this example up before, and it's one of my favorites. This is 335 million hex in the pools back in, I would say this was October, right? And then some liquidity provider came in and pulled that liquidity off the exchange, off of the pools, and a couple beatdowns here, and got it from 300 million down to 68 million. So someone was able to accumulate between October and November. Let's consult the price chart here. October and November. So between here No. Sorry, I'm having problems. In November. Somewhere in here, this guy pulled liquidity off, and it could have been Godwell buying $4 million worth that pulled that out of the pool in that initial burst, and then it was liquidity was added back in on this dump, and then maybe somebody was providing LP down here, and then they pulled a bunch of liquidity off. Right. So that would have been. So that was September 23rd, September 22nd to 10/28. Okay, this is making more sense now. What did I say, October 28th? Yeah. So, okay, so this is really, some pretty cool information. So if between this period of time when Hex got to its lowest historical volatility ever, somebody pulled like 300 million hex off market between these two moves. It was either bought off market in the case of right here for the second impulse, or it was literally pulled off in the form of liquidity pulling, right? And you can see that here on the chart. The first impulse was the pulling it off directly by market makers, and the second impulse was when Godwell came in and bought the rest off market. So he did it. He pulled some out of the market, made it scarce. Then because there was less hex in the pools, he injected $4 million of USDC, pulled the hex off market with this hand, and left some USDC in the pools. And that set the table so that the amount of hex in the pools, even though we capitulated back all the way down to 1.69 cents, was never able to get back above 300 million. Right? Is this making sense?
Makes sense.
So, you know, the amount of hex in the pools has continued to go down. The amount of Ethereum in the pools has continued to go up. The amount of USDC in the pools going up. So,
I got a question for you. In TradingView, you can't just select liquidity like this and add it to your chart, huh?
we can. We actually had a gentleman produce a liquidity tool. It's only for the USDC pair on the 0.3% tool, pair, but it's still valuable.
Is this the right hand side bars?
Correct.
Or,
Yep.
Okay.
So if we get this here, we can see. I'll go out and delete out some of these lines so it can be easily seen. Oops. So here's your key levels. There's
Got
like,
it.
you can see this clear gap here between here and here. And now price is trading in there, so price can be volatile in here, can just go up and down in here. But as soon as you break through here, it like a little slower than quick, then slow. Then, I mean, this is where it can go really bananas. But this implies that, you know, we get some confirmation of a move higher. Right now, we're forming support in this volatile range. Break down, you're going to go into the thicker bands. Once you get into these bands here, liquidity providers can pull hex off market like we saw between September and October of last year. Or large players can come in when price hits these like 4.4 or 5 levels and just buy $1 million, puts it right back up to here. Buy $1 million, puts it right back up to here. Buy $1 million. And by this point, like, what does $3 million do to the pool? What's 100 million hex at this price? 100 million hex at 0.054. It's $5.4 million. 100 million hex at 5.4 cents, $5.4 million. Well, that's just implying that, you know we know guys sitting on the sideline with 15 million plus. You know, not saying they want to allocate it all there, but even just a $1 million pull can push it back up to these bands. That's pretty cool. Right.
Yep.
So they'll easily be able. So if $1 million then would pull like 20 million hex off market. I think this first buy, this new ETH Genesis whale pulled off like 26 or 28 million hex in one order, which would mean that you'd lose like 15 to 20% of the supply, like in the snap of a fingers. One guy.
Yeah. Well, and we've seen. So another thing that's going on, right, is we've seen some of the liquidity providers making changes such that we've been as low as 35 million in the pool.
Yeah, it's been scary because on this daily chart, as we were moving up, so you can see here I got the dip catcher algorithm. Anytime on the daily chart here, the price pushed up into the red bands, the liquidity was very, very low. I saw it get as low as 6 million hex in the pools at one point, and that's when you got these retracements, right? Because nobody's willing to incur that much slippage. Like, they'll just wait for people to sell to fill the pool back up to 30 million or 50 million, and then they'll come in and start pushing the price back up. Because like, why take on the slippage risk when you don't have to? But eventually what happens is there's just nothing left, and everybody's positioned. And the people that are positioned aren't looking to sell on a 2x or a 3x. They want to hold it till the dollar price point, right? And so the weak hands are out.
Becomes a fight for who wants to get those last bit of coins before we make the official, like, permanent move upwards to new price ranges.
So if I got $1 million on the side, right, and I'm looking to enter into Hex, besides the fact I know there's some ways to do that, right? What am I thinking about not going in? Why am I not going in yet? What am I waiting for?
Yeah, you're waiting. If you're on the sidelines waiting to bring your $1 million in, you probably want to do it in like $100,000 or $200,000 chunks, and you're waiting for the price to slip back down, break this green band to come back down and test the blue and pink dip catcher bands, right? So you're looking to buy at 3.8 to 4.2 cents. And isn't it funny that these dip catcher bands are literally lining up with these liquidity areas, right, where there's the thickest bands of liquidity. So like you can see here on the tool here, this band goes all the way out to here, and that's right where this dip catcher band is looking to catch. And then the blue one's just slightly above this 300 grand sitting at 4.2 cents. So that's what they're waiting for. Is they're like, okay, well, we're still thinking, they're still more bearish, thinking that there's downside implied, right? They think that there's enough sidelined hexagons that are broke as a joke and need to sell, and that they're willing to capitulate. And this is a big call to action for hexagons. It's like, understand the power you hold, man.
Yep.
Why give away your thing that's worth dollars for pennies? Like, just wait. Go find money out somewhere else. Ask grandma for money. Like, whatever you gotta do, man. Like, just don't be like, obviously grandma's not gonna have 50 million hex to sell, right? Because she probably did something special, right? But again, think about this stuff.
The thing about that though, right? With this, I think, I know we're going to get into more analysis of this, maybe not tonight, but we start talking about who's really selling. I know that hex is being sold. That's for sure, right? Because somebody's on the other side of these trades, but I don't know that the common holder is really unloading, like in FUD and fear and doubt right now, and capitulating. It doesn't feel that way. It feels like people have an agenda. Maybe I'm wrong.
You're right. I think you're onto something there, Chris. I think you're. The man who made Hexfire's got some logical stuff going on up there. I think this is just trade tards who don't understand hex that we're chasing this pump. Remember like the price action that got us here. We got a good tweet from Richard here. We got a good tweet from Richard here. Right? So this was all just, speculative mania that was driving price here.
Yeah.
Right? So these guys they're just taking profit or taking a loss in some cases. Silver outlines that regularly, how a guy will enter here in a trade, ride it up to here, watch it come back to here, and then sell for a small loss because they're like, oh, this thing's going to go back down because they still have PTSD from the bear, just like you've been saying.
Yep. And then they chase it again.
Then they'll buy that next little pump.
And they'll buy there'll be a trader type, and they'll come in here. They'll watch for the successful breakout, retest, and resumption, and they'll enter back in here, watch it go to here, make a lower high. It'll break back down. They'll sell for a loss again. then it'll do a fake out, and it'll go up, and it'll make it, and then it'll be like, oh shit, and that's how you lose your money in crypto. Is like you're looking at too long of a time frame. Just look at I like to tell people to look at this chart. And if people give me shit for like drawing fractals and stuff sometimes. Not really. You guys don't really do that, but I would want to give myself shit for doing this all the time. Check this out. Let's just do this again, guys. Right?
Let's do it. Yeah, that sounds good to me.
And we're back up to 40 cents again. It's no big deal. You're basically following the fractal to a T, except you're doing it faster. Right? You see, the interesting thing here is that you underperformed on this sell-off compared to the fractal, but you overperformed on this sell-off compared to this fractal. But you overperformed it in time and downside action. So it's just a function of the low liquidity and the market sentiment, right? Here we were in a freaking bull run. Here we're coming out of a bear market. So that's what's causing the variances in the move, but the move is still legit, right? Because we're going to get that speculative run up if you get some good news, right? That's just, we're getting proof of it time and time again. Yeah. So.
Two tweets away, basically 1 to 2 tweets away from.
And look, that hammer, remember I was showing you this hammer on Bitcoin a little bit ago. It just flipped green on Hex. This candle closes in 2 minutes. This candle closes green. We had one of these before. Look what the upside looked like. I'm not saying we're going to go to the moon, but if you get a repeat pattern, like you're at least going to go make a lower high.
Oh, thank you for grabbing that. I was going to ask you to do that. Yeah. So I mean, things are looking good for Hex, man. Look at this: 475 buys at 260 sells. Bullish. The amount of pooled USDC is more than the amount of pooled Hex. Bullish for Hex. And look at the WETH pair. You broke structure here, but you're still holding the 1618. Do you guys understand how bullish that is? You're holding the 50 RSI on the daily. You actually didn't even come back to touch the 50 RSI on the daily. You hold the 50, you're still bullish, right? And this is against Ethereum. It's supposed to be the big Mac Daddy of the EVMs. So I'm kind of being arrogant because it's like it's a problem that I got, because I'm in Hex. So it makes me a bit of a maxi. 1600X.
Yeah.
Is this?
That's what you're saying.
What we say it? I heard you say it. I said it. Oh, 1600.
Look, we get if we get downside, I'm a buyer. We get upside, I'm a
That-
buyer. Until we get above, you know, targets above double-digit cent targets, like I'm still a buyer because look at you don't want to get left behind, right? I'm telling you that I've been buying Hex even at 6.5 cents, right? Like I have been, and I've been in Hex since the beginning. Because until you got dollar Hex, like it's still not too expensive for me. Like I'm not that prejudiced. I understand that there's institutions that are looking at this thing, looking at PulseChain, saying, oh, like I'm happy to get exposure in this thing now. Like maybe we'll drive the price up to 50 cents. Maybe we'll drive it up to $1.50. And then we'll just milk the interest off of it, 180-day stakes. That once they acquire their first 100 million, and they support price above 70 cents or 50 cents, or pick your poison. We're still multiples away from that. Yeah.
Show that on hexcalc.net, like how much they get they can peel off every 6 months.
Yeah. Oh, if you do want to look at if you're an LP, or if you want to, okay, here's another thing to your point, Chrispy. If you are a multi-million-dollar position is what you want to get. Why not set liquidity between 5.4 cents and like 8 cents, a ton of USDC, and then as the price chops inside of that range, if you get downside action, you can get exposure to Hex by just pulling it out, removing your position from the LP, right? If it goes down. But now that play should have been done before, right? Because now the price is going to move back up, and so you'd be left with your USDC again, and plus a little bit of fees. Right. So but when we get into that new range, if you want to accumulate the new range that's going to get created between 8 cents and 20 cents or whatever it's going to be, then that's how you do it is let's push the price to 20 cents and then it retrace back down to like 10 cents. And you could just be sitting on USDC and watch everybody just dump their Hex into your pocket between 10 and 20 cents, make a couple bull flags on the chart, pull all the liquidity off. Now you're sitting on like 50 million or 100 million Hex. And you didn't have to move the price up. You just let everyone, you let ignorant hexicans give their Hex away for nothing, right?
Yep. And they paid you to do it. and they paid you to yep.
Yeah. So let's say, I don't know, what's a reasonable amount of Hex? 20 million was like $1 million, right?
Mm-hmm. Right around there. Well, I think if I was going to be doing that, I'd be contacting you or someone else in the community and say, hey, listen, I need a little bit of help. Maybe a consult to do this.
I'm over here. AXisALiVE.com.
Yeah.
Check it out. But yeah, so like if you got your 20 million Hex, I think this is 20 million. Yeah, 20 million Hex. Stake it for 100 days. Price is 50 cents. So what'd you do to get the 20 million? You pushed the price up to 12 cents. The market took it the rest of the way to 20. You set down your USDC as liquidity so that when it got sold back down to your entry point, now you're sitting on a bunch of Hex, and you got it for better and better prices as it comes back down. And now you're just chilling like on 20 million, 40 million Hex. You pull the liquidity off, and you made fees doing it. And now you just wait for the market to take it higher on a speculative run. Mm-hmm. If you got like a 2 or 3 year time frame, 50 cent Hex, you're pulling in 250 grand every 100 days on what was originally a small investment.
Add another dimension where you're taking that 250, how much is that? Half a million Hex you're yielding every 100 days. You're using that as single-sided liquidity to the upside, providing the liquidity for other people to enter during that time period. And then you just do the same thing you did with your USDC, but on the other side, let everybody fill your bag with USDC from the interest that you earn from staking, pull that whenever it goes high. And then now you've exited without having to dump the price down, and you've given other people liquidity to enter with less slippage, just from interest that you milked by utilizing the contract.
And you do this all through V3 on Uniswap?
Mm-hmm. Yep.
Is that normal? Yeah.
Mm-hmm.
Yeah. Well, there's a question, or not a question, more of a statement, but Armand's in the chat was mentioning it, that the 30 ETH buy made the price pump and everyone jumped in, and it was kind of, he says, classic, right? So first, do we feel like people came in and helped push that up when they saw that, and why?
I think it's just a function of
reflexivity.
Yeah, I mean it's not as complicated as it seems. I think it's just you're basically people right now in this key moment. This is a key inflection point across the dollar, gold, Bitcoin, Ethereum, Hex, stock markets, and they're all acting similarly, right? So. Again, we'll bring it back. We'll pull up those charts quickly. Bitcoin. Look at it flipped green. So you got the hammer printed. We closed
All right.
today. So that's looking good. ETH, same thing. It's actually trying to hold the midline of this trend. I know it's dirty, guys, but it's key because it's the 0.618 golden ratio that we came down and targeted. I actually had us coming down to this level on my chart set from a couple days ago, so I felt pretty good about that. But
Sure, I'm sure your members did too.
I hope so. Hope they took advantage. But I just kind of lost track of thought here. But oh yeah, then the gold. Let's check that one out. You know, it's ripping. You know, this is a safe haven in an inflationary environment, right? My our teammate, the contrarian, who's a legacy markets expert, traded the risk out of the portfolio for 34 years down in Chicago, professionally. He went long last night gold, right? And so he sees this stuff happening in his markets. And then so one thing I wanted to touch on here was a chart that we always look at together, and I forgot to bring it up, which is the stablecoin index. Well, look what we got on the stablecoin index, guys. We got a shooting star.
Opposite.
Trend reversal, guys. Shooting star. Bam. It's a reversal pattern. Get a bullish trend, shooting star. And whenever the stable coins are bearish, that means that money's going to flow back into the blue chip cryptocurrencies, right? So that 20K level is really being protected, and you're seeing it in the weakness on the stablecoin index, in the what the candle close as for the day, and you're seeing the weakness in the US dollar right here. So it's like sputtering for breath right now. The dollar is, you know, and I've done a deep analysis on that, so I probably don't need to talk too much more to that. But so there's one more thing I wanted to talk about Hex related, as far as was I just wanted to pull up the TVL, and I want to show you guys that the TVL is at a local high. This is the same high we had here in September of 2022, same high as we had here in August of 2022. And so it begs the question, well, where's all this locked value coming from? You know, how have we been trending up for this long, and where's the value coming from? It's coming in the form of Hex getting put into the pool, right? Hex is being deposited in the pool, USDC and Ether getting taken out, but not enough USDC and Ether getting taken out relative to the Hex getting put in, so that the TVL is actually being driven up. And so all it would take is one big market maker to pull their Hex liquidity off market, which would shoot this down. The TVL would go down, and then it would make it even easier to pump Hex.
Yep. What was I going to say? And then you pair that, say, like with the scenarios we were talking about, people like with the $1 million on the side or whatever, looking to get in that 3 to 4 cent range. Liquidity gets pulled. Things are going to the looking like momentum is going to the other side. And then, like, at what point do you get this money FOMOing in to get whatever they can at these levels before it makes its permanent move upwards?
Yep. So that's all looking good, man. We kind of give you some strategy on how to enter if you're a big bag.
How to exit.
Yeah, and exit. Which I wouldn't be looking to exit. I mean, shit. Just wait, man. Just wait. Liquidity pool is looking good. Support, like if you do get pushed down through here, I'm sure someone's going to hop in. You're not really getting that, though. You're getting the breakout here. So we're breaking out of this key level. Last thing I'm going to do before we go into the data now. So we're basically going to pull up Chris's screen, Hexfire screen, and we're going to like basically checking out like all kinds of different metrics and stuff of like what would it look like if you DCA'd into Hex for an extended period of time? How would you have performed relative to other cryptocurrencies that have ran really hard during this run up? Like probably be looking at some of the big wallets in Hex and like what they've been doing and like how they've changed positions over time and the importance of at least protecting your position. We'll talk about a couple other things, but before we get there, let's just finish out some different things. This was Communist on the 12-hour. It was an airdrop for Hexicans. It got a pump. So it looks like this is being accumulated to me. So I think you'll just stair step your way up going into the bull run on Com. It's a good one. Another thing I wanted to look at was the Maximus DAO tokens. These
Hey,
are
before you move on to that, I'm
Yeah.
still waiting for capitalist. Where is that? Anybody know? In chat? So I'm okay with communists, right?
Yeah,
But
yeah.
I'm pretty happy with that, and I love Kodiak, so I got no beef there.
I think
But
I
go
think
ahead.
I think that's the name Alex was maybe considering for the token that he would make to support the communist system, capitalists. I think, if I
Yeah,
remember correctly.
yeah, that would be super bullish and cool, man. All right. Sorry, AXiS. I knew you were going to talk about Maximus stuff, and I want to hear about this
That's great.
because I need to party. So I
Yeah,
want to know.
yeah,
I want
yeah,
to know
yeah.
what's
So,
going on.
something about Brian over there from the Maximus DAO is like trying to get people to come party with him or something. I don't know.
I don't know.
He's trying to throw a party.
Netflix and party. Yeah.
So this is my loadout. How I look at how I value the Maximus DAO ecosystem. So if you're new, if you're old, Maximus DAO is like perpetual stakes. So you get tokenized a stake. You make a 15-year, a 10-year, a 7-year, 3-year, a 1-year, and each one of these stakes I have here is valued against hex. So the yellow line represents 1 deci for 1 hex, or 1 lucky for 1 hex, or 1 base for 1 hex. You want to know if you're putting hex into a contract to stake it, but you're getting a coin back as liquidity in the form of one of these tokens. How far off am I from my fair valuation of getting back my 1 hex from my new token? And so what I did here is I basically created this composites of charts to basically show you whether or not the coins are at a premium or a discount. And so you can see that Maxi, which is the 15-year, Trio, and Base are all at premiums, meaning you actually made more hex by sitting on those tokens than you lost. Like you're up not only in token appreciation, but the yield that's behind the token. So when you redeem it, when these things come due to redeem, you could potentially be getting back a premium on the token, right? Because this is where it gets fun, like when things get super overvalued, like what happened with Maxi, where you could get 2.5 hex, 2.5 hex per Maxi. That was obviously too juicy of a premium. People couldn't hold their wad, and then they just, they capitulated down the price, and they pulled immediate profits, right? They duplicated or almost tripled their hex position by letting this thing get up to such a premium. Well, so what I'm trying to draw your attention to is how the 7-year and the 10-year are starting to pump, right? They're starting to rally, and it's like, well, why are they rallying? Well, if you don't know, there's a new product coming out from those guys. It's called Party, and it's a Sloth. If you kind of want to elaborate on that, that'd be great.
Yeah.
Party.
It's exactly what it says. It's a hex staking party. Basically, they're making their contract public for anybody to fork easily, and anybody can come together and start their own staking pool with their own token, just like all of these tokens have their own stake behind it. And I think that's actually pretty cool. If you go back on my channel a long time ago when Maximus DAO first came out, I had a whole stream, I think Dipcatcher was on it too, where I talk about like, hey, like charities could use these kind of things for fundraising and then have like some kind of token associated with the cause that has a hex stake backing it, and everybody's kind of all pulled together supporting this cause, but also like earning money in the background. Like it's a cool marketing and advertising thing. And so they're making that available for everybody to do. The party token is basically a they earn the fees from the staking pool. So I think that all the staking pools pay a certain fee to the party token stakers. And then there's another way, I forget, but it's like if you hold party, you also get hex. But I'm blanking off the top of my head how that works. But I know that when you stake it, you're definitely getting a cut of the fees from each of the pools. So I'm really interested to see what entities, like what types of group of peoples are using this contract, and how that volume changes over time as hex gets more popular. I'm really interested to see. Yeah, go ahead.
So is it all of the contracts or one of the contracts?
I think, and I don't remember off the top of my head, so don't quote me on this, but I think you can set the time frame yourself.
Okay. Yeah, I'm just curious as to which contract is it like. So is it basically you can go do your own Maximus or?
Yeah.
My understanding is that you basically can create a staking pool of any length, and you could crowdfund. It's basically a crowdfunding hex for your own staking token. So you can create your own, 6.66 year stake if you wanted to do that, and you could just get everyone else to hop in with you and call it the devil stake or something.
Yeah,
Abit said as a pool creator, you can set the time and the fee yourself. So it's variable. It's variable as the stake creator makes it. There we go.
So thinking in terms of running your own bank, kind of thought. So this is outside of trying to sell this to other people, but we've had a lot of talk, backroom talk, about how would you run a family bank on crypto, right? I know other people have talked about that, and there's all these things we talk about. How can you do that? I mean, how can a family invest in one particular token and then stake and whatnot? This seems to be a nice way to do that, right? Because at least if it was kind of closed wall, just assume for a moment nobody's going to screw with you, right? If it's kind of like a closed garden type of activity, where you're backing it up with the hex that's out there, right? That's acting as your backing. And then you're the primary liquidity provider for your family. You're controlling how that gets managed. That might be an interesting way, to do that. Thinking out loud.
Yeah, family trusts, even like a group of friends who want to all get in on Hex together can do this, so that they can all keep custody of things without having to rely on like one person managing all of it.
Last question I'll take here, and then I'm actually going to pull down the charts so we can get to the actual presentation. We spent way longer on this than I was anticipating.
This is the stuff we all like, though, man. 1600X is real, man.
It's very real. We've lived through it now. We didn't think it. We thought 10,000X was cool, but 1600X was cool too, right?
And I'll take both.
So talk staking strategies for new hexakins who accumulated 1 million plus including the PulseChain copy. We will be actually talking shortly here about we'll be talking in depth about staking in general. We'll be talking about like what behaviors was taken in the past and what's worked. And there's just so much free content on the web already about staking. I guess I can do a shameless shill here that if you guys want like actual like one-on-one advice for that, then please do go visit my website at axisALiVE.com, and you can get like a really based out strategy, how to prepare for the bull run. And the free answer is that be careful about locking yourself out of funds coming into a massive uptrend, right? Do not fucking go long and so hard and so long that your quality of life doesn't change when you see dollar prices of Hex. Please don't do that to yourself. Not before the PulseChain launch, okay? So just be sensible, be conscious of what the ETH fees are going to be like, and maybe it's best to think of this as like positioning yourself with 3 buckets, right?
You definitely want 15-year exposure to T-shares. But the cool thing about that is when you do that, you get 3 times the number of T-shares. So you can go lighter on the number of Hex that you get that long-term exposure for, and still have the ability to take advantage of short-term price appreciation.
So, without further ado, I'm going to pull up some deep Hex data.
Oof, I like that.
Yeah, this will all change. We'll fix this up and make it look a lot better someday. Working on that now. I was just thinking about what you were saying there, AXiS, because that conversation's coming up a lot. People asking lots of strategy questions, how to get ahead of things here as we move into move into the bull. I think you're dead on though. I think guys and ladies, you should have a plan. You should think about it. Might take you a couple of days to put something together. Put a plan together in your head of what it looks like, and maybe it's as simple as the 3 bucket theory, and do it. Get that plan together. So at least you know that you planned not to sell if that's what you ended up doing, right? And wait another cycle. All right. Hey, so a lot of you may not have seen Hexfire before. A bunch of you have. AXiS, thanks for the invite. I really appreciate it. You know, come on, talk about some stuff. So long and short of it, for me, you know, I started doing this Hexfire thing to share the data that I've been mining on Hex over the last year or two, and now we're finding all sorts of good stuff, little nuggets of things to pull out and have fun with, right? So I guess I'll start with going over to just our basic site that some of you have seen, which is the Hexfire site, and probably the most important thing to share with people has been this share rate model, and I know it's been pretty popular with folks, and so it's one of the key things I want to talk about as we go over things, because there's always some action on this, right? T-share rate only goes up and to the right, and this is probably the information most people want to talk about. Ah, it didn't move, huh? Hold on a second. I don't know if my screen's changing for you. Can you guys confirm it?
Mm-mm.
All right, let me reshare this.
Okay.
Yeah, you don't want to see that. I thought
Don't
I got
be giving all away your secrets now. We know we got to keep some of this locked away.
Yeah. I thought it was doing pretty good though. Let's see. I was like proud of myself, man. I thought it was doing great. Nobody's saying anything. It must be working. All right. Here's the chart. So I'm over on the you know, the T-share rate chart. So this has been the number one, I think the number one bestseller, if there was a bestseller, not for sale, but for people to look at and kind of check out. And this is where what we're able to do is look at some different models. One that we calculate as to what the T-share rate will be in the future. I did a good video on this today. I'm doing about weekly updates on how this line changes over time. But we have a couple different estimates. One estimate is one that's math. You know, I use the average payouts to kind of predict and forecast what we might see, and then therefore figure out that maybe in 15 years, you know, T-share rates will be 133,000 or more, right? And then I have some other models that are out there. One is by a guy by the name of Hopper, and he's out on Twitter. And you know, Day One Hexagon, he had come up with an algorithm that actually predicts it. And when you get into this and you actually look at these, you see how it's been performing. You can see how the actual matches up pretty good with the Hopper multiple, and it kind of intertwines itself over time. And then you can also see my base model. And the base model, we expect that it will shift up to the left and actually arc as well. And we see that on the shorter time frames. So it's really cool eye candy, right? Because be talking about T-shares and be, you know, which is the basis of this hex mining. I like to call it pulsing now, but you know, this hex pulsing mining or publishing. Right? I try to coin that phrase. You know,
I don't even know what to call it anymore.
I don't know. I've pulsed 14 times, so I'm good. So right.
You're gonna get 20% less pulses if you wait a year to stake.
I even did an extra one, so I have a ladder of 15. So I 15 pulses. But you know, you look at this, it's like, oh my God, right? Well, these numbers change all the time, right? And of course, Sloth, you know, from working with Hedron and Icosa, right? Big deal there, right? As to how this works. And so it's driving this forward faster. So it's great candy to look at it this way. But what we're really able to do is get down to some actionable stuff, right? And so if I bring my dates way in, I'll show you guys what I've been talking with people about. So I'm going to set my dates to November of 22, and then out here to June of 23. So June 1st. 23. You know, what we're able to do is we're able to observe what the actual T-share rate has been and actually see where it's going and when it's going to get there.
Hold on, I got to bring up this comment quick because it's too good, too juicy of a comment when we're looking at the share rate right now. Look, as it goes up, this guy says, Capuccio says, diminishing returns for new people, T-share, or for people who have millions of hex, not new onboards. That is true now, but if you're not forward thinking about this, you will miss the opportunity to buy tens of thousands or hundreds of thousands of hex now and being able to stake those T-shares in the future for dollar price targets, right? Because you have already accumulated what is now then going to be $1 or $2 or $5. And you won't, eventually what happens is that it gets away from you. So it's definitely not as easy as just, stake it and forget it. Really, it's not. It was intended to be that way, but because of the wild volatility and price action, you kind of have to know, are you closer to the bottom of the market and how far off are you from the all-time high, and should you be buying and should you be staking, right? There's a lot of these things that makes it more complicated, but the short answer is that, and we'll allude to that in a second, is if you're not accumulating a bag right now, good luck accumulating a big enough bag at $1, and then your statement will be true, right? Because right now is the time.
Well, yeah, we're in a sweet spot at the moment with price of hex being low enough that you can accomplish your share goals a hell of a lot easier than you could have, even a year ago, right? Because the cost was so high.
And just real quick, the thing I like to do is I like to juxtapose what's happening now to like what Bitcoin did before, where it was so easy to get a bunch of Bitcoin early, and now people dream of getting one Bitcoin. And so that psychological flip in the greater market is probably what's going to happen in Hex, as it did in Bitcoin, as people go from, oh my God, I'm trying to accumulate 1,000 T-shares to they're working hard, leveraging their time and dreaming about accumulating one T-share over a couple stakes.
Mm-hmm. Well, let me throw this too. I don't know if I'll get the name right, but it looks like Capuccio, maybe. Is that the name? So the comments are good comments, right? So on the very surface, I do lean pretty heavily on T-shares. The word T-share. I probably should be saying shares, right? Because it does make a difference. And I think there's a couple aspects of this, because it is scary for new people when they come in and they're like, oh man, I can't accomplish this. I can't do this. So number one, don't FUD yourself out. So if you're interested and you're doing your own research, maybe don't FUD yourself out. All right. If you don't FUD yourself out, what do I mean? Because just because these numbers look high and sound high doesn't mean that it won't be valuable to you in your strategy. It's very important. Now, why do I say that? It's because, you know what? I made stakes that end in 2023, and I made them in 2019. I got lots of T-shares, right? Lots of shares. But you know what happens when I end those? They all go away, and I can't rebuild. I can't rebuild, and I'm not the only one. The only way I could rebuild is by building in the system. So, along with the fact that these share rate changes are kind of like little mini, difficulty changes, which kind of equate to mini halvenings, sometimes multiple times a day. It kicks me out of the system. It kicks everybody out of the system that's on the shorter time frames. And so they have a great opportunity for meat on the bone to be able to come in and build their position, because I can't stay. You can't stay. Right. So that's number one. Now, of course, the longer the stakes, the bigger the bang. And that's why people talk about the Cuatro Cincos and, of course, the HSIs. The other big thing that people don't realize, and let me pull that chart up here in a second, maybe. Your APY floats up over time. It floats up within the hex system, and we can prove it mathematically that it's floated up. Now, could conditions change conceivably, so that might not happen? I suppose, but with an increasing payout, daily payout, which gets fed by the mining machine on a daily basis every time more hex comes out, there's more payout, and the fact that the T-share rate's going up, while the number of T-shares is going down, means that you really have a huge opportunity to watch watch that APY float up. And I think the chart we were looking at me see if I pulled that one up already. I had done a payout chart. And actually, Abit's in the chat could speak really, really well to this, but I had done a payout chart. I think I have it up here. If it's not this screen, let me see if it's changing for you guys. Yeah. Okay, you got a blank screen. That's good. All right, that's the share rate changes. All right, I'll pull it up. I'll pull it up separately. But we have seen that the actual number goes up over time. In terms of APY for the couple of different people that we've been tracking. Person A, person B, and person C as part of the power of T-shares. So anyways, I just wanted to get that out since that very nice person was asking some questions about that, right? Because it isn't just for T-shares are for everybody. Shares are for everybody. It's not just for the whales. In fact, the whales tend to do a lot less with T-shares than anybody else, because there's an awful lot of people that hold a lot of hex that don't stake, and it's not just the OA, right? So there's a lot more going on in this system behind the scenes. Hey, so along with this, just to kind of give you guys an idea, because we always see this, we always hear a bunch of comments. So on the site, I track, I don't know, maybe I've got 60, 70 pages now of data in here. There's a lot of different things. And one of the things I'm working on with AXiS and others is curation of data. But one of the cool things you can do when you get this kind of data, and you can satisfy all your little whims, right, as to what's going on in the system. And so one of the things I hear a lot is small stakes don't change T-share rate. That's false. Small stakes do change T-share rate. And, short stakes don't change T-share rate, but they do. And now you can do the analysis yourself on this, but I can show you that, yes, we had, today's the 10th, right? So we had a stake today that was an 8 million hex stake that ended with 21,000 in yield. It was 11-day stake. It changed it by 13 hex. But we also had this little one, this 1,300 hex stake that was staked for 3 days, and it changed it a 10th. Or you can find other cases where you have very small amounts of hex, 400 hex that was staked for 2 days, changed it 19. Contract doesn't care, man. It doesn't care what you think. All it does is math, man. So we hear a lot about like this can't happen, that can't happen. Now, clearly, if you have like a really big stake that happened to be staked over a period of time where it had really great yield, you definitely could see that one make a change. But just because it's big doesn't mean you win. It doesn't mean that something happens with it. So this is why this is very interesting, and it goes right to the point about the T-share rate going up over time. When we're looking at the T-share rate and how it changes, all these little stakes, they all serve a purpose. They all jack that cost up on a daily basis. And I just showed you that, sometimes it's 5, 6, 7 times a day that it's going up. And that's all because of us and us pushing, the button, to end the locks, right? And come out of it. So it's pretty cool. The other thing is, I don't know, maybe I was the only one that assumed this. I assumed that the God whale stakes, right? So therefore the God whale must have made lots of rate changes. God whale's never made a rate change ever that I can find. Now it might be
interesting.
That might not be a wallet that I know. And you go, well, right, Sloth, you'd be like, what do you mean? Why wouldn't it have made a change? It's so big, right? I mean, this guy stakes big and he stakes long. Well, there were other stakes that did better. That's it. And they got there first and they changed the rate. So now if we look real quick at the future rates, these are all the rate changes I'm expecting to see in the next several days or whatever. And we just kind of pan down this list. you know, I'll put it in order of date so it looks better. See somebody doing some stuff. So we see this the 11th, and so we do see a change probably coming to 604 sometime in the next day and a half, right? And then the ensuing ones. But if we go down here, here is Mr. Godwell, 3.4 billion. So if nothing changes in the system to make this not true, Godwell, provided he ends the stake maybe the 23rd of this month, will increase the rate from 26,661 to 26,672. So that'd be like that kind of average 11 points of 11 hex increase. So we will actually see that.
Interesting. Pretty cool.
Yeah, it's interesting how it all comes together and works. And I don't think anybody knew all this. You know,
No,
when Hex was launched. This is like all these like cool little tidbits. So the actionable stuff on this, a couple different things, right? When you look at this kind of a chart, and we look at the time frame even a little tighter, you know that there's going to be an increase coming. And so if you're making a short stake, and there's reasons to make short stakes that are viable. Not every stake needs to be multi-year. But if you are making a stake, in even a short one, you can look and say, well, if I was planning to skim, interest or yield, well, I should end it a couple days before this so that I don't have to pay a higher rate if I'm going to restake. That's actionable. And you could also go out and look at the rest of this year and go 12/31, 23. We've got big change towards the end of the year. It's very possible. We're going to go from something around 30,400 to over 32,000 in December. Right, that's going to be in one hit.
As a function of those super long stakes that were probably pretty big payday, right? But not necessarily in all cases, but a lot of times they are.
Yeah, this one probably definitely is. And so when people characterize that the big ones make the change, if you dismiss all the little ones that make changes and all the short ones that make changes, the big ones are the ones. And we could actually go find this actual stake if we wanted to and go see what it is.
When a big one makes a change, it makes a big change.
Yeah. And so here's the thing. If you're going to be staking, maybe you want to do an 8-month stake. You stake so it comes out before this so you can restake. If that's what your plan is, right? If your plan is to restake or to remine. Remind me. Yeah. So if you might want to go back in and do that. And the same thing goes for a little harder to do with the staking with Icosa and Hedron, but certainly because you can't set the dates.
Yep.
But you certainly could know that this was coming, make some plans, and do it before a big jump like this.
Yeah. If you're planning to compound and your stakes had already ended, then you do want to do it before the jump rather than after. Yeah.
Why hurt yourself by doing that? Otherwise.
Yep.
I don't know if I put all the dates in here. I do a date range up here? I did. So we saw that at the end of this year, we're going to see a change, right? So let's do 12/1/23 real quick, and we'll see what the future holds. For some reason, I'm not getting a reaction here on this screen. So I'll go this way instead. Gotta bring it down. That's close enough.
I see a lot of comments on here about maybe playing the liquid position through the bull run or by trading up by hoping that PulseX or PHEX outperforms so that you can get a bigger position in Hex and that's totally viable strategy. I think so many people are relying on Pulse and PulseX as a second chance to capture a bit of 1,000x or 1,600x, right? So I mean, there's going to be plenty of people playing that game. I just want everyone to remember that not getting Hex now is not a good way to look at it. I feel like just so we're clear, I think you can bridge over your economic energy over there in the form of eHex, Ethereum, or whatever. But the one thing that you want to hold over everything probably is eHex, right? because even if you got an 85% drop off the pulse chain launch, the price of Hex is still going to be most likely higher than what it's at today. And so you'll be able to bridge that value over to a chain where things are basically valued at zero, and capture a lot of the supply over there relative to what you could by ratio trading what is over there, because they'll be more tied together. So just kind of keep
AXiS, I'm a lot smarter than you. I can do it. You can do it. You know, I'm right there. I 100% right there with you. So I'm joking with you for those people who don't understand that I'm joking. I 100%, man. I thought I was gonna outsmart Big Payday, and Big Payday outsmarted me. And I know, I didn't lose terribly. I did like a 3 bucket move, right? Like you were talking 3 buckets, right? But I would be like 10 times better off if I had just DCA'd myself and not tried to play the game. Now, now why? So, and that's kind of the ethos of the original community, anyways, right? Is get away from trading, make a plan, and go do it. People don't have to listen to me, and they do whatever the hell they want to do. But I'm just saying that me personally, I'm not doing it. And I had that chance. This time around to kind of do the same thing with not believing what might happen with this copy, and with the fork. And you know what? I'm all in. I'm not going to mess around. Now I may partake in some ratio trading, but I'm not waiting to get in because I don't know what's going to happen, and it's just my feeling, not financial advice.
I'm gonna just quick divert for a second to a chart so we can remind people what that feels like and what that looks like on the chart. Right, is when this is what the chart looks like going into the bottom, right? And this is back in September of 2020. Right, and then we start to recover. This is kind of where we're at right now. We just kind of made some good moves, right? Now we're retracing a little bit. We're coming back down, chilling. We're testing our big moving average, right? But here's where we are now. We're about ready to come out and start to make moves higher, leading into some sort of pulse chain launch, right? And this is the kind of move that you can expect, is this sideways volatility, but then bam, if you get any kind of good announcement, this thing is going to start really shrinking down the past price action, right? And so you're trying to compete against something like this, look at how big this thing goes. Like, it's all that action we saw earlier down is now squished down here between this tiny little range.
Yes.
And you guys that are saying like, oh, it's too late. This is 100% move over 34 days. And then in 13 days, you went 233% more, right? And so then you're competing with, the crash that comes after, right? Bam, 88 down 85%. And then everyone's like, okay, it's going to go back down to like 0.0005, right? You're going to go crazy lower. Nope, that's not how Hex plays. Bam, 2 cents within 30 days.
That's not how Hex does it.
676% in 35 days, right?
Okay.
So just a little reminder of like what's possible.
Here's something else to think about for those comments who are saying like Hex is going to take a back seat to Pulse. Well, there is some ratio where people who are holding Pulse are going to flip back into Hex. And the main reason you would do that is because of the value proposition of short-term staking. So once you get enough Hex, liquid Hex, you can viably stake every 30 days, not care about the T-share rate increase, and produce a pretty reliable income. And so if you just think about it in the absolute extreme, if you could take one Pulse chain token and trade it for 1 million Hex, would you do that? Like, yeah. And that just shows there is some. Right, go ahead.
No, I'm with you, man. Yeah, 100%. 100%. Right? I'll take them all. Let's go.
Right.
I'll take them all.
So because we all see the value proposition of Hex, the short-term staking value proposition, and even T-share accumulation value proposition, at some point the deal is just going to be too big, and we're going to flip our Pulse into Hex. And even if we're doing that just on the Pulse to Hex ratio, arbitrage will fix the USDC ratios to match what the Hex Pulse pool is showing with people doing those trades. So Pulse is just going to pull Hex up if it goes too crazy because people are going to want to accumulate more Hex. And you pair that with Chrispy Man's data on how Hex is getting more and more rare. That's just adding a supply shock factor onto increased demand based on FOMO into Pulse.
So usually I'd be worried about moving the market myself by giving my predictions and sharing my secrets. Right.
Just say
But
$10 hex. I
but
like that.
since nobody's going to listen to me about it, I'll tell you exactly what the secret is. The secret is this: to acquire hex. That's the secret. Right now, of course, you don't want to listen to that. That's fine. So let me throw
Hey,
this
I'll
to you.
substantiate that if you want. I'll show them the chart while you're talking.
Yeah, and so where I'm headed with this on. Let me tell you, if I can pick up hex at a ratio of 100 pulse to hex, I will do that all day long, man. I will build the biggest hex bag I ever had. Now I don't know if that'll happen, but my favorite ratios to be watching would be 100 to 1 pulse, 100 pulse per hex, and 3 pulse x per pulse. So those are the ratios, and if you want to do the math, you can do the math. From hex to pulse x. But if I see ratios that look favorable like that, I'll be moving. During that period of time. So.
That's 10,000 hex per million pulse is what you're looking at.
Is that what it comes out math was?
100 pulse per hex. So
yeah.
Yeah.
So whatever it is, yeah. Well, I was thinking a billion pulse for 10 million hex. So I'll move. I'll move
more ambitious than me.
Well, if it happens, man, I do that. I do that in a heartbeat.
Yeah. Well, I think the million hex mark, like for any individual, is like the mega make it stack. Like if you have a million hex liquid, like you can just like wipe your hands like you've accumulated a bag to make it into perpetuity forever. And so anything that you can do to any kind of ratio that favors your ability to accumulate that million hex faster, is probably a trade you're going to want to make over a long period of time.
Yeah. Now, of course, some of this leans real hard on your viewpoint and my viewpoint about passive income, right? So I'm really interested in passive income, and I know there's other guys waiting for swing, right? They want to swing trade the stuff and catch the highs, but I'm looking to create passive income. So for me, that's why these made up numbers of going to 10 million X and being able to stake that, even if it was a ladder, right, could yield some pretty good yield. Go ahead, AXiS. What do you got? I see you.
I mean, we can only compare to what has happened, right? And this is the kind of stuff Hex does to Ethereum. It's like it goes down 87% against Ethereum and then rips 4,000%. Goes down 87% against Ethereum, and now we're up 437% in 42 days. And like, so if your standard for the maddest gains of all time was Bitcoin, right? Like the same thing. You've been down against Bitcoin 88%, but then you ripped 8,000% against Bitcoin, right? And so it's just like to think that the ratios won't get favorable in the like if let's say PulseChain launches, but what are people going to do? They're going to dump what they have a lot of for something they have nothing of or very little of, right? And so what's that look like in a ratio wise on Pulse when it starts?
Yeah, who knows what this is really going to look like, because and some of it's going to have to play out, guys, right? That's why I said I mean, I concede that it's possible we're going to see we'll see multiple more X's on Pulse and Pulse X than on Hex, right? It's very possible, right? I don't know the future, but it's not a guarantee, for sure. I mean, it's just what a lot of people think. And then, but Hex is going to be tied so closely to that with liquidity. I mean, I saw the charts on ETH and BTC. And so in 2014 and 2017, I mean, what's the likelihood Hex just does nothing while PulseChain does 1600X? I'm thinking there's going to be some, and I think that's the point that AXiS was just getting to, right? By showing that ratio is going to pull it up. All right, so kind of move along with this just to show you guys. So I did pull that big one we're expecting. So this one staker will make it go up to 32,000 at the end of the year if they end their stake. And you called it, AXiS, it was right. This is pretty big payday, 1,400-day stake, reasonably large stake, and to my knowledge, non-OA, not an OA stake. And so since we were on this topic, let me move over to a different screen. One of the guys was asking about share rate on PulseChain. I think on PulseChain, I'm not really sure that we're going to see a higher share rate, at least not immediately. And in fact, we may actually see lower payouts because there may be more stakers.
Makes sense.
And if that happens, there'll be more of the additional hex that's produced through minting. Yes, it'll give us higher overall payout, but maybe shared against more stakers. And if that happens, it's kind of hard to model, you know, to know exactly what will happen with that.
What you just said implies a higher price, though. That's the thing.
Yeah, it absolutely does. Which is the great modifier of that feeling, right? Of that despair. Now, I went over here. Let's see which chart I wanted to show you guys. So we finished this one, so I'm not going to pull up the share rates anymore. Oh, there was a question about the OA, which in the chat here, and how much non-OA hex is staked. So this won't give it to me on the screen exactly the way I want it to be at the moment, but these are the addresses that I believe are OA related. Of course, I don't know who the OA is, and I can't confirm it. So this is based on information that we've gotten from the community. But based on this information, I can see that liquid we're attributing 564 billion to the OA, and staked about 76 billion. Okay. But if I swap that over to the OA instead, or non-OA, and wait for this to change, we have very, very different numbers as to what's staked and what's not. And I got to go look at this because I don't think this is actually giving me right numbers at the moment. All right. Well, scratch that one.
Liquid might be closer, right? But the staked is a little bit.
Yeah, that's way off.
Yeah.
Or something may happen with the model. You made me break it. It made me break it. It's your fault. Yeah.
Yeah.
Well, you know, sometimes always with the internet, don't believe everything you see. You got to look at stuff twice, and it could be better. Yeah, so that's not going to be right. That seems like I'm picking up the wrong number token. So let's scratch this. But we know from doing our analyses on this stuff about what it is that the OA controls is about that 80 or 90%, right? And we can derive and get to the number that the guy was asking about non-OA hex staked. And so it's something, it appears to be something like 10% of all hex is non-OA and 10% of all non-OA hex is staked. Some sort of order of magnitude like that in that area. If somebody else has the number in chat, throw it out there.
Yeah, I think that's interesting because then that would imply that roughly based on kind of the numbers we talked about, we're looking at that, like, is it 64 billion roughly off memory that we have user staked supply roughly?
Yeah.
And so they're always matching it with about 76 billion. And that's kind of where you come up with that, rough estimate of like roughly 30-ish% APY for 15-year, right? Roughly.
Yeah, exactly. And that's why it's terrible that right when we pull it up, the numbers are wrong on that chart. But it would have been nice. Yeah,
we can't give away everything, guys. It was
I know.
You gotta make it look like it broke. If we let you get it all, it's just going to be too much.
That's right. I deliberately make things like that happen so that you can't get the right information.
So, actually, you got to go sign up.
Yeah. So one of the other things I did recently with some input and some thought was go after the bow waves. So this is a snapshot from a few weeks ago. So this is.
Can we explain the bow waves first?
Just,
for anybody new.
Yeah, I'll do that. But this is a snapshot from a few weeks ago. Okay. So it's not up to date like today's data, but it's very similar every single day. And what this does is it looks at the the amount of hex that's coming out each day going into the future. And so as you're looking at it today, being on the far left, you're looking into the future. This is how much hex is coming in. This is one of the wonderful things about hex. Hex is transparent. You can see when the supply is coming in, right? You can see when new hex is being minted. It's not a surprise, right? Or likely to be minted. And so it forms kind of this wave shape. And that's why you see my squiggly wave lines. That was very high tech. And no, Markable did not help me with it. I copy pasted it myself, right? But this is, you know,
it's just the wrong color.
Yeah, I know. Hey, listen, I'm colorblind, man. Not really, but maybe. So you have
Got him.
yeah, but you see how that's set up, right? And so then I did a little bit of time traveling, right? Because we get this FUD all the time. Oh my God. AXiS, what are you going to do? Did you hear we've got 7 billion hex coming out this month? What are we going to do? Right. And so you hear that FUD. And sometimes it's just, it's just new people, you know, because I said the same thing, right? The first time I realized I can go look this up on Hex Vision and go, wow, look at this. We got billions coming out. Billions coming out. I mean, what's it going to do to price? Well, so this is where I went and did the little bit of time travel. Let's see if this one actually works. There we go. And so this took a bit of time to really build up and process. I went back to each of these dates that are here, and it does it automatically. So guys, I didn't really travel in time. I just manner of speaking. But each of these dates that's listed here is a date where if you went to that date and you were looking into the future, this is what it looked like. You know, the first line, and I'll highlight one so we can see it. So on February 23rd, if you were looking forward, you would see this big candle. Well, that was what was expected to come out, both yield and staked in the next 30 days. And then the next one did the same thing. You know, and so it went all the way out 12 months.
Quick question for you. Is
sure.
that big blue bar that you're getting month over month, is that a group of users, like a small group of like 10, 20, 30 users, or is that one user? Or is it hundreds of users?
Hundreds.
Hundreds? Okay.
Billions.
So competing for that, like whatever, the 23rd of each month or whatever day it is.
Yeah, billions and billions and billions. Okay. So this is 30-day look ahead. So it's doing the counts. You know, doing the summation for 30 days. But you know, the next bar is 30 to 60, the next is 60 to 90, etc. And you can clearly see the pattern, right? I mean, I could draw on this, I guess, if I want to, but you can clearly see the pattern, right? I mean, it's up, 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 right? I guess if I use the line, I'd see that a little bit better. So the trend is up. The trend is up. In fact, when you look, and it shouldn't be surprising, you know, just from us looking at this, right? You can see the big blue bars getting higher each month. That is a reflection of more and more hex being staked in the 30-day window. All right, gotcha. So that's what's happening in that area. And so it was really interesting to go through and do this. So now you can tell people, hey, listen. So when RG3 or anybody else goes, yeah, dude, we know it happened. It's like that every month. That's what we're talking about, right? I thought it'd be worth explaining to people that these little waves, it looks the same. You know, it changes because you see, you know, big stakes might show up and they move back and forth, and you know, they'll move closer to the 30-day window as you move into the future. But you can see that also the estimated yield goes down, you know, over time, you know, as far as what the percentage yield is, you know, and how much is coming out in each of these time frames. And so that's another factor of what happens with the T-share rate, because over time, you know, people who are staking the short, they're losing their ability to make yield by being too short.
Nice. The proof. Someone had a question for you. Is this data used? Is it being pulled from the chain?
Yeah. Yeah, well, this one isn't because this actually has because I'm doing the time travel thing with this. It requires about 6 hours to process, so I have to do it overnight. And I broke I broke Microsoft with putting it up there and trying to have it run overnight. Ran out of memory. I don't know how they run out of memory, but apparently they do. But I have to run this one locally. But the source of the data, when I do update it, it's coming from a combination of the graph, which is there's actually a subgraph out there for Hex. Of course, I'm pulling from Hex daily stats for some of the information, and I have various other locations I get it, but it's all coming from the you know, the original source is coming from the blockchain. And what's cool about it too is, you know, because I'm not doing an app, I don't need to be connected like you would with a dApp.
Mm-hmm.
You know, to go do a transaction. I just need data. So it's a little bit faster and easier to get it this way. So this is the bow wave. And I think on the charts that we threw out there, you can clearly see, you know, as far as that's count of stakes, pretty spread out. But when we start looking at T shares, you can see T shares or shares staked. This 10 to 15 and 5 to 10, overwhelmingly, people got the message that this is where they should be staked, right?
Mm-hmm.
Is out further. Now, of course, you also get more T-shares or shares for going out that long. And so that may also plays into it. But in the less than a year time frame, we're just at 5.76 of all T-shares are there.
Mm-hmm.
And that power, that number percentage goes down over time, you know, pretty
Right, because
good.
the share rate's ratcheting up against the short-term stakers. If you want to go back to that chart for a second, I can elaborate on it. This is really powerful for people that want to, you know, see a breakdown of like what kind of runway we have in the next bull run as far as like price suppression that's possible from short-term stakers. We've estimated roughly that there's roughly 10 billion supply, right, liquid, and we have roughly like 60 billion stake supply, but only 5% of that 60 billion staked is within a year, and let's say a combined 10% over a 3-year period. And if you use any kind of market cycle theory looking forward into 2023, 4, 5, 6, that's basically what we're targeting for like a bull market's top, right? It's sometime between now and 2026. And so you do get a good 3 years of runway. So just for some, you know, napkin math, you know, 64 billion coins staked times, let's just go 10%, be 6.4 billion, right? So 6.4 billion coins, you know, can be sold if all principal and all interest is sold, right? Which, you know, high chances are that those users aren't going to just dump, not all of those users are going to dump all of their bags, chances are, right? So, but if they did, at the current price, what would that be? It doesn't seem like it's very much. $371,000? That's not making sense to me. Oh, I forgot. So it'd be 3.30. I think it's 37 million. Hold on. Okay. Here we go. $371 million at these prices. Okay. Now, for just so you guys know kind of what kind of volume Hex does. Hex did 6.5 billion with a B dollars in volume between October of 2022 and October of the previous year. So how many times does that 371 million go into 6.5 billion? Assuming the volume level stayed the same, but with increased adoption and big green candles, we're going to probably assume that it's going to at least double, right? But I'll just keep it to what we know. So if you did, let's say a 12x in price, now you've got $4.4 billion of sell pressure if all of it was sold, right? All the staked within 3 years. On a 12x, what's a 12x for 0.058 times 12? 70 cent hex. So 70 cent hex is possible under the conditions that all of that was sold as sell pressure at the 12x price. Okay, and you have 3 years for that to come out. So that means anyone that ends short of that gets hit with penalties. So there's less. Chances are people aren't, not all of them are going to sell all of their principal. So you really have a lot of runway as far as like how high the price can go based on just strictly inflation, dollar inflation, sell pressure. Okay.
A big deal, man.
Seriously.
Yeah, and plus, you know, the other thing is we're talking about things like you're using the numbers for, you know, volume. I would say that we know that there is not any no cost. What's the right way to say this? We know that's real volume.
Correct, because it's all on chain.
It's on chain, and people had to pay for it to do it. They paid for it. So not only is it on chain, they paid for it, which of course by definition because it's on chain, right?
Mm-hmm.
Which makes it. It's not that somebody couldn't be, you know, because we see the stupid bots doing things too, but people aren't looking to spend $1 million just to prove that there's high volume, right? In something. This is not that type of a token or a coin or situation. You know, like if it was my database and I wanted to convince everybody I was doing something really great, you know, with trading lots and lots of Bitcoin, I'd make it look like I was trading 2 billion a day. You know, more billion than even exists, right? And in dollars, not in, which is what the claims are against some of those guys, right? Who have these different exchanges. Oh, so the other thing I wanted to just tie up with this here is that I moved over to the sum of the hex that's staked, and this is where the big thing is. You can see that yes, we do have quite a bit of hex. It's less than 1 year. It's about 22% and rising, and I know it's rising because I can see the trend upwards, right? You know, in these periods, and in fact, when I compared the 30, 60, 90, what I really found, we'll go to the chart, it shows a little bit better, is what I really found is that the 30-day look ahead was trending up, while the 60-day was about neutral and the 90 was trending down. So more and more of the shorter term hex is getting kind of like wrapped up into 30-day stakes. And we theorize, you know, that one reason for that is people waiting for PulseChain, just like you were talking about, right? I mean, what am I going to do? This stuff's coming out, right? I mean, I have a stake and I have X. What am I doing with it? Well, if I don't want to go liquid, I'm going to stake it, you know, or mine with it. You know, and well, PulseChain's coming, right? So most people kind of favoring shorter time frames, or they just don't stake at all, right? So those are two things I think that are taking place. So you see that.
So what you're saying, so just to summarize, you're saying that you're seeing a trend towards shorter stakes because the price is rising. Is that we can assume?
Yeah, and of course there's that aspect too, is that people don't want to sell.
Right. They just want you know, and as you approach that 70-cent target or that dollar target, you're going to see more and more people opt to stake shorter, especially on the Ethereum side, right? Because gas fees are a concern and the yield will be good enough, right? And that's, you know, for anyone that's adept, you can realize that that is a data set that is you're going to want to watch closely. I guess that's what I can say about that.
Life is like a box of chocolate.
Life is like a box of chocolates.
That's it. I'm telling you. I was going to look real quick at your write-up on this and what we said we were going to talk about. All right, so we talked a little bit about this stuff. Let me show you guys. I can be able to look at the rich list, and I got to go back and figure out why the rich list isn't working. But I'll work on that separately and figure out what's happening. Let's do DCA Calculator and then wrap up to whatever, unless you have some more stuff. Like maybe you want to talk about do we want to actually dig into the supply analysis in any detail? What do you think?
Yeah, I think that, you know, it'll substantiate what I was saying earlier. We can just, you know, whiz through it. Maybe we do that quick and then we'll come to the DCA calculator because this is more fun.
Yeah. Yeah. You want to pull it up or you want me to pull mine up? Do you have something prepared up for that or do you want to use?
I don't. Well, I just have a slide that basically said what we talked about off the cuff, which was roughly at 10 billion.
let me grab my link real quick for this one.
So,
we'll pull it up.
What Chrispy Man did is he went through and he did a supply analysis to see what's the trend of the supply, how fast is it increasing due to inflation, and how much of that supply is liquid, how much of it's user supply, how much of it's dormant supply, to give us a better idea of where the sell pressure is going to come from as we move through the bull market. Is there a way for whales to add liquidity to show a wall, then pull it, a false wall? Yes, there is. You would set, so we saw this with a whale came in and set up a wall from 12 cents to 20 cents on the 1% pair a few weeks ago in trying to entice the market to bring price up into that range. But then it was pulled and staked. Okay, so here we go. We got some good data here.
Yeah, this is another fun one that we worked on. So I know you've seen this before. Well, maybe not this particular screen, but you know, we've talked about the data a lot. So one of the big questions we get, right, with anybody analyzing any token or coin is what's the supply look like? Is it inflationary? Is it deflationary? How, you know, do I need to worry about people dumping on my head, or don't I? Right? You know, so what's going on? You know, somebody going to, you know, go inflate the coin, etc. Now we know Hex is complete and immutable, and that you know, we're not going to have to deal with that stuff, right? But we also know that we have an entity that's part of the contract called the origin address, which is a lot of the FUD stuff. So one of the things I had worked on with one of the guys in the Telegram chat is you may have seen him before, Ninod. At Ninod, I think he's at Benezoid or something like that for Telegram. But he had a really cool inflation chart, and which we've duplicated now, where basically annualizing the monthly inflation. And monthly inflation, you know, how much is actually being minted and coming out is actually declining on a percentage basis. And I thought that was pretty interesting, that we could see that.
Very, very interesting. Very important too.
Yeah, and crazy. Yeah, crazy talk, right? Like how can something, you know, how can something that produces more hex all the time through minting be acting in some sort of deflationary way, right? So
well, we know that the T-share rate goes up, so those who are staking short are getting less yield because they're getting less T-shares, and we know that over time as the price rises, that compounds the price against those guys who try to accumulate big enough bags to stake short meaningfully. So you got compounding factors that's putting pressure on the supply and making it disinflationary. And that's kind of like a high level look of what we're seeing.
Very much so. Right. And so I'll try not to go fast, but you tell me if we need to hurry up or move on with this stuff. But I think it's important to kind of like step through this idea. We know that we have total hex supply that's out there, and total supply is all the circulating supply, right? And all the supply burnt in the mining process. I know I said staking, but that's a typo. You know, it's all of it, and what that represents, total hex represents what actually is inflated, right? That's what is inflated, right? It's not, you know, it's not just some made up type of number. The only time the hex inflation goes up is when somebody mints more the first time, and sometimes you'll hear us called ever minted hex, right? That's a terminology that's out there. And so yeah, okay, it goes up over time, not unexpected. It was pretty much planned. Then you look at circulating hex, you see the same type of thing. Now I did throw in the time frames in here for the sacrifices as well as Godwill stakes. One to show the sacrifice effect in terms of how much hex was circulating, and circulating is defined as everything that's liquid, so not locked, right? And you know, so not unexpectedly, circulating went down quite a bit during you know, during our sacrifices, and part of that has to do with how people were adopting the system and what they were doing during that time frame. And then of course you also see it go up and down during the well, actually all these periods kind of an up and a down, but you can see that when, you know, when a stake ended for the Godwill, he was big enough to drive the circulating supply up, and then for it to come back down over time. And then when he ended his stake, staked again, it went down. And then his stake came out. You see this little bump here at the end of the year, right when he was doing his staking, or at the beginning of the year when he was doing the restaking. So this is our circulating hex supply, which is the sum of all the liquid tokens. So it was kind of good to know that. So we have our total supply. Okay, that's ever minted hex, and you have how much that is out there circulating. And so here's the FUD, right? The FUD is that, look, this is a pretty big number and it goes up and to the right pretty sharply, right? This is the concern, FUD, right? But when you look at it, a big component of that is the OA. Now you have to be a believer in hex and a believer that the OA is benevolent for this, you know, to follow this process a little bit further. But you can see that quite a bit of this hex is controlled in addresses that we think are OA addresses. It's like 564 billion, 565 billion hex that's circulating, that's there, out of, you know, somewhere in the neighborhood of 581 billion. So if you believe that that's what's happening, you know, with the origin address, you can actually
be clear here. We have on the bottom left in January of 21, we have roughly 571 billion. And then on the far right, you're having like upwards of like I think if you go back one screen.
Oh, you could go to the full one over here, yeah.
On the circulating hex supply, back one tab. Just combined, yeah. So you're seeing like the total increase from January 2021 till now is like roughly from 567 billion to 580 billion. So what is that, like 20 or 30 billion, something like that?
Yeah.
So that's a lot. But again, now what Chrispy's going to do is he's going to take out the OA amount, and he's going to show you what the actual user supply inflation rate looks like, because this is what's meaningful to what can hurt the price chart, right?
Exactly. And so that's what we're going to do is we're going to go look at the adjusted circulating hex supply with the OA filtered out. And all of a sudden, this isn't so scary anymore. And actually, you know, I saw Sami, or Somi, I'm not sure how to pronounce that, but Somi had been doing some recent streams where he was talking about some things like this, you know, like boiling down market cap to what is the real market cap if the OA owns X amount, right? It's a much smaller. Now his case for this is because it's a smaller market cap, got plenty of room. Don't worry about it, guys, because you got plenty of room to grow because it's a smaller market cap. Now, whether you believe in market caps or not, whole nother thing. But when you look at this is what you can see, though, is all of a sudden, instead of what I was talking about hundreds of billions, we're talking about, and you know, some sort of adjusted circulating number that's sitting right around 17 billion.
It's just not there, guys. It's a 2 billion increase in 2 years, or so.
Yeah, and then when I went a little bit further with this, and after talking with AXiS and some others, you start looking at what's been happening with the circulating supply. You can see, yeah, it goes up a little bit. It's been going up. It's been trending upwards, right? But when you start looking at liquidity, how much of that circulating supply are people willing to sell? Now, this was surprising to me and didn't come up until I understood a little bit more after being taught some lessons, right? this is over 2 years. We're on a 2-year downtrend of the amount of hex that people are putting up for sale. Now you can argue, okay, we'll get those other 16 billion, but those people didn't decide to sell. They haven't put it on the market, you know, as far as providing liquidity. So there's an awful lot going on here in this chart that you can see a downtrend in what people are willing to put up on the market, even with all the volatility that we see going on, right? With people pulling LPs and all the rest, the trend is downwards. And of course, not surprisingly, the percentages are also down, you know, also trend down over time of the different supplies.
This is some of the most bullish data we have on this market supply, is how every time we have a sell-off, that those coins are then pulled off the market or redistributed from the few to the many. And that's what's causing this like scarcity of coins and why price is going to be able to rocket.
No, it just seems like it, right? I mean, like for sure. And so then the bonus moon math content, this is another part that we had dug into is, you know, they start talking about this. Okay, so we got 16, 17 billion, right? But what does crypto normally do? When they talk about inactive addresses, and you know, an inactive address for Bitcoin is considered to be any wallet. Actually, it's the coin. They actually measure the coin, not whether the wallet's been active, but because of the UTXO, which I'm not an expert on, but they can actually tell whether or not a Bitcoin or a portion of a Bitcoin has moved in the last year. And anything that hasn't moved in greater than a year or more is considered to be inactive. And so a lot of times when they're doing the stats on that, they'll exclude those, you know, from and call them inactive. They're less likely to move. So I went and took a look at what we had with Hex, and you know, sure enough, of that 16, 17 billion, about 7 billion or so haven't moved in well over a year. And so we subtract out that amount from the circulating supply. That's where we're kicking this number around about 10 billion, 10, 11 billion as being really the effective amount of supply that's available and circulating. So a lot of terminology to get there, but when we boil it all down, we think it's about 10 billion that possibly could be sold.
Mm-hmm. So, you know, you think about this now, there's 10 billion liquid coins, right? Circulating supply. There's another, what do we say, 6.4 billion that's within 3 years, staked within 3 years out, roughly, from earlier.
Yeah, I have to, yeah.
I think it was like 6.4 billion.
Yeah.
So roughly 6.4 billion, because we said 10% of the stake supply, right? So that means that staked 3 years out plus liquid circulating supply combined, you're at like roughly that 16 billion coins that are a threat as sell pressure if all of it was sold, right? And that's the number that you're going to want to know, is that roughly there's that 16 billion is basically the immediate user supply, right? That can be sold or be traded. Key thing to think about. So 16 billion times current price is like just short of $1 billion. It's like $930 million. So we did 6 times that in volume in 1 year between October to October.
Ah, there it is.
So consider that, you know, just based on past volumes of traded, this is the most bearish thing you could say, is that all of it would get sold on a 3x, right? So then you'd still have a 3x implied. So 5.8 times 3, 17.4 cents, like baked in. Like, good, you know, that's if all of the circulating plus all of the 3 years out down to now stakes come EES and all of it's sold, right? And you do it over a year, and you trade flat between the current price and 20 cents or specifically 17.4 cents for the 3 years. It's just funny because it's like there's so much headroom to go much higher, because we know logic says that the majority of that supply is not going to get sold on a 3x.
Yeah. I wanted to pull this back up real quick so we take a look at it. I remember what the problem is with this axis, because I do have I have yield to date included over here. It's one of the things I need to do to break break this down. But to your point, what I was going to try to get after is we're talking about liquid tokens, right? And so we got the 17 billion over here that's listed, right? And not only once we pull the inactives out of here, you end up also let's see, let's just do it right here on the screen. We'll do 365 days, right? So it's going to give me the numbers for the wallets that have gone, haven't moved for 365 days or more, right? So you can actually look at the 7 billion and see what these people have been up to, right? And when was the last time that they actually did anything? But to go even further with it, to stratify this, you could also say, go back down to 1, bring that over. Now let's do 364 days. So the ones that we do think might take action sooner, right? That's at 9.8 billion over here. And you could begin to start classifying, well, how much are these? I mean, so is there anybody with, anybody with, 10 billion? Well, looks like they got a couple guys. What are they going to do? Do we expect that they're going to go hurt the system? What is their one C5, which, C5, and then the other is Godwill. What these are both Godwill. So we don't think Godwill is going to do anything. So maybe we take, those guys are off the list. So what's the next one, right? Somebody has more than 1 billion. We got 21 of those addresses. Who are those people? Anyway, the point is if you've got that much of the supply, stratified 33%, 18%, and I'd have to do the percentages on the liquid. But if you have a distribution that's such that the folks that are holding the most are incentivized not to kill the system, why would they kill the system, right? Anyways, I think there's a lot more work that can be done to dig into these numbers and try to figure out, what's happening and why.
Yes, sir. We are just getting started. This is just like the introduction to a lot of where this data can go. Obviously, if you know the total supply that can affect the market, you can really create a clear path forward for, once you start measuring these variables against incoming volumes and adoption rates, like with Metcalfe's law, let's just say it doesn't make me any less bullish on the asset.
Yeah. And now that we're, and I'm sure some people have been tracking it, but now that we're a little bit more actively tracking, the adjusted circulating supply, we can really nail down, hey, what is that trend? Is the trend going to continue to go up? Does it flatten? Flattening would look like more people mining, right? So if more people start mining, more Hex, and they're locking more of it up, it'll start affecting the system in other ways, but you also see that line flatten out. So there's some really cool data to dig into. All right. We're almost back to 6 cents. All right. Hey, so this is the DCA calculator, and for you guys who are listening, if you join next week, it'd be fun. I'm going to do maybe a half an hour, maybe 45-minute stream every Wednesday, and we'll try to set it up for every Wednesday to track DCA, dollar cost averaging, the process where people put a certain amount in periodically, and we've expanded it. I've expanded it out to look at a number of different tokens, not just Hex and ETH and Bitcoin, but it works very similar to this. This was pretty bullish. I was like, I was looking at, what would the results be for this year, for instance, if I had started at the beginning of the year and I had been doing, let's say, $100 a week, and I was doing it every Friday. What did I do with this? What year did I pick? Oh, okay. Mm-mm-mm. It seems like everything I'm doing today is not working the way I want it to work. In fact, it's like a very bad Friday, because we certainly haven't had weeks yet. So, all right.
Just from
Well,
memory, do you remember what day of the week was the best day to DCA?
yeah, that we can go do. Good segue. Good segue, AXiS. I just don't know why that did that for me. One of the things we were able to do is actually go look at the DCAs and the amounts and you know, what seems to have worked the best. And what we found is for Hex, it apparently since the beginning of Hex, Friday has been the best day of the week to actually DCA, and it changes over time. While the 31st has turned out to be the best day of the month if you're doing a monthly. And then the moon phase, guys, your best time to have been DCAing is on the first moon, and the worst was the new moon. So you wanted to stay away from those days. So just trying to do that, you know, figure out where's what.
Where's Waldo?
Yeah, let's go here. So the way I should be seeing this working, and I've been working in the background, I want to do it, is actually something a little nicer and cleaner like this, which is our original version. So I'll have to go back, where it actually allows me to do the what ifs to see date-wise what's been happening. And this one's a little bit more set and not able to allow users to do things with it. And for some reason, 2023, there we go. So my expected result on that other screen is I would have expected it to shift just like this one did for me and show me that there's only been 7 days, you know, or 7 weekly periods since the beginning of the year. And if I had been putting $50 in a day, you know, for each hodl, I would have put 350 in, and then auto reporting the results. You know, that if I had been hodling Hex, you know, I'd be up 110%. But I'd also be up on ETH and BTC, but it's just a much smaller number. You know, that type of thing. So I'll have that panel up and running with the multiple tokens. And what we'll do is every week we'll use it to bring maybe some of the SHIB guys in, some of the Link Marines in, some of the other people to come in and have a conversation to show what their tokens, you know, show what their tokens are doing in comparison to ours. Oh, all these great comments.
Oh yeah.
You notice the smartest people are writing us comments.
Smart recognizes smart.
That's right. That's right.
I'm waiting. Very impressed for the. I'm very, very impressed with the people that follow. They y'all are not chumps. You know, this is dense material, and if you're still here now, you know, obviously I've seen that we peaked around 250 roughly. If you're still here now, like you have the drive to make it throughout this choppy crypto spring, and I mean, you know, props to you guys for listening in. Obviously, you know, if it wasn't clear already, there's very blue skies ahead of us as far as like how high Hex price can go leading into any kind of speculative, you know, mania going into the fork for the snapshot, right? Assuming the snapshot doesn't just happen, right? Even if it does, like, I'm willing to bet that we're not. I guess I would be willing to bet anything on that, but because we don't know. But we looked a big payday for an idea of what you could expect, right? We think it was like a 650% run off that low. So, you know, a lot of that economic energy is going to go across the bridge to PulseChain, and then a lot of it's going to come back across. But the experience over there on a vertically integrated chain is going to be probably amazing. You know, it's been a long time coming, and so I anticipate because it's an EVM that's a parallel to Ethereum. You know, you're going to get developers that are going to want to develop over there, and the adoption can go insane. Remember where the economic energy started, though. It started with Hex. So Hexicans are kind of in control of that market, at least off the rip. Let's see if they can hold on to it.
100%, man. Well, you know, we can make things happen. Can make things happen. And you know, I don't know the vibration for 1600x, but I think if we think about it enough, we can envision 1600x and make it come to fruition. You know.
Mm-hmm. Quick math here. Shout out to Money Gain Crypto. See if I can pull this up. You know, this is showing you typically, you know, what we can get for a return. You know, on average, layer ones do 1100x, or 1100x in 3.8 years, right? And so, I mean, if that's the bar, right? You know, PulseChain is going to be vertically integrated and have a lot of functionality and economic energy that some of these others didn't have. So, like, you could probably overperform that, and it's just insane to me, like, that if that's like the bar, right? And so don't sell yourself short. You could ratio trade 5% of your bag or 10%, but maybe you're the guy that literally just closes his eyes, throws the dart, trades it all into PLS day one, watches it do like a 50x, and then sells the top into PHEX, and then PHEX goes and does a 10,000x again. Maybe you're that guy, but I wouldn't suggest playing with your whole bag like that. But just saying, it's a possibility. Somebody's going to do it.
Yeah, I think you should think it out. But yeah, I mean, there's going to be some opportunities. I keep joking about the 1600x, but I'm very serious about it.
Yeah,
like, you know.
Yeah, if your goal is to increase your hex bag, Pulse is an avenue to do so.
Me and the crypto jetty of the same kind of thinking. I hope that happens. Pair that liquidity, come somewhat to parity. You know, it's gonna be fun no matter what. I do think we have an opportunity to win really hard on this one. It is so damn early. It's so damn early.
Yep.
I know.
Yeah, there wasn't a lot of guys that sold the chart down from the top. I mean, we all took, I would say we all, meaning the guys that were here in 2021, a lot of people did take profit, right? But it wasn't, the guys that actually hurt the chart was few and far between. And now they're out, capitulated and out. And they have to wait a few years for their stakes to come out. So they're not really a threat short term, right? That's where this runway is coming from, this headroom.
And I think I showed this to you before when we first put it up. Still right now, even at $50, man, if you had gone in, this kind of opened my eyes about the DCA stuff and kind of going along with this. If you had gone in at the beginning of Hex and just did a weekly DCA, you know, consistently since then for $50, your liquid hodl would be over $300,000.
Damn.
And you know, unfortunately for my Bitcoin, my beautiful Bitcoin, I would only be up 36%. Can you imagine waiting 3 years for 36% in crypto and be like, I'm hodling, boys. I'm going. I'm staying. Don't worry, AXiS. I'm right here with you in the trenches. I'll hold my Bitcoin.
It doesn't really make a good case for Bitcoin, does it?
No, not a really great case for Bitcoin. It's a great case for 12% a year. That's a good case for that. You know, and perhaps, you know, there's room for somebody who wants to do that. You know, Sailor likes it. Of course, maybe not so good that he bought some a little bit higher than now. But I mean, if you got in at the absolute bottom and you can wait a cycle, maybe you're always in profit forever.
Yeah, well, we got to think, when we're talking about Bitcoin now, we got to go back to what we talked about earlier in the stream, which is we got to think like an institutional investor who can put in billions of dollars into something and watch it do a 3 or 4x, and now you're sitting on 2 or 3 billion more dollars. It's a whole other game that they're playing at that level. And so Bitcoin's the first asset that actually gives those guys a chance to make those kinds of returns in a short period of time and risk, you risk 500 million or $1 billion, and you see it go to 2 to 3 billion. So it's just a different game, and that's where retail and your Ethereum crowd is going to get their money, is going to be from siphoning it off of Bitcoin, right? As Bitcoin rises, because there's a game there to be played amongst institutions, right? And I think shifting gears and thinking forward is in Hex terms. We only have like a $15 to $20 million TVL pool to play with, as far as like the liquidity that we have to play with on a daily basis. But the aim here is to grow that pool and bring on institutional investors slowly. It'll start with high net worths, and then it'll go into Genesis whales, then it'll go into small funds, then it'll go into big trusts, then it'll become like big bank type investors, huge hedge funds, and then it'll become like an allocation for like everyone's portfolio. And at that point, the liquidity will be there that now Hex will be like Bitcoin's game it is today, right? And so, but
Yeah.
keep that perspective and like remember like where this is all going is like this stuff takes time. It took Bitcoin 3 cycles, and it wasn't until this last cycle when it went to 65K that we actually broke through and became mainstream as far as an industry, right? And so it's a long game, but Hex is positioned to be one of the best store of value cryptocurrency, store of value assets in the world, really. You're getting in at the ground floor.
Crazy good. Crazy good. Man, yeah, you get me all pumped up. I got this FOMO going on here now.
Yeah, I did say 1100x. It was 1124 or something. I think that's. Hold on, let me pull it up. I'm not sure if it was from launch or from the dip. How high? It's the ICO price. So it would be pre-launch of those coins, whatever the ICO price was. So that that means that there's even more X's implied if the price goes down and you catch the bottom.
Mm-hmm.
If BTC is crypto, gold, Hex should be the platinum standard. Yeah, it should be, because it's you have elements here that are trackable. The most valuable thing about Hex is that its monetary policy is immutable. So the value doesn't come from the price necessarily, although price is the function that gives more eyes and adoption. It's the code that works, that the T-share and the user base as it grows that compounds and makes this thing super valuable, right? So yeah, I mean it is. It really is platinum when you consider being a user that gets the fork and you have power on both chains, right? Because now you have the most leverage in the system that anybody will ever have. It'll be having equal amounts of bags on both chains. After the fork happens, now all of a sudden you have to fight you either have to buy it on one chain or the other. And so your buying power into the system gets diluted in half automatically.
Yeah, I don't know what's going to happen, but I'll tell you what I think will end up happening.
Mm-hmm.
Xenology. Stop asking that question. 2025, 2026. Unless we see lots of emergency end stakes.
Okay, that's like your good estimate.
Yeah. It's actually a pretty good estimate. You go look at. We can go look and see how many T shares are expiring per month. Going out, and to be able to knock off. Now, Godwill can knock a whole bunch off really quick. So if he decides not to restake, then maybe we get really close to 10 million. But assuming he continues to act the way he's been acting, assuming he's a he, we'll maintain those, and we see about a 10% per lead on T-shares on a monthly basis, right? Mm. So 10% of the T-shares ending don't get wound up. So it might be me. I don't know. What's the S sound? There's somebody having trouble hearing. Yeah, AXiS. Yeah. So that's that. And then I think the other thing I was going to say is I don't know how to say D hex to 6961. but the you know, here's my moon play. I end up with doubles of everything, and they're all super valuable,
Mm-hmm.
right? And both of them are mooning. How about that? That's
Mm-hmm.
what that's kind of like the super play.
Yeah, I'm pretty sure that that's the camp that I fall into. I don't. There's going to be your. I mean, I've kind of spoken to this before. How your OGs are going to have a tendency to grab on and hold on to what they know and what works and what they have the most of, what they've been using, so eHex I don't believe is going to go away. I think it'll actually have a premium over what you're going to get on pHex. pHex will be the cheaper chain, more adoption, more users, smaller bags coming in over there generally. Just from a hex perspective, people buying hex on PulseChain, but then there's the element of added adoption from non-hexakin, non-PulseChain people that are just Shiba Inu, Ethereum whales, stuff like that, that could potentially bridge their energy over there and or wrap their energy on ETH, bridge it over to PulseChain, create pairs over there, and start to like really give that ecosystem a lot of liquidity and a lot of price appreciation. And that's kind of where the hexagons win the most, right? Is when because the eHex ain't going away. You know, it's going to get accumulated. It's going to go to multiple dollars, and then people that are buying today, accumulating 100,000 or 200,000 hex today, can stake it on ETH for 50, 100, 200 days, and get a meaningful yield. You know, because the with these store values like a Bitcoin, they make floors and they don't go back to breach them.
Yeah, yeah. I think it's so damn bullish. Look at it. I'm looking at the guy asking about P-SHIB. Yes, there's going to be a Pulse SHIB. You betcha. And I'm holding on my SHIB. Don't worry. I'm not going to give up my SHIB. I'm going to keep it. Yeah. I think as we get closer, right? So what's basic marketing type stuff tell us? First off, somebody's got to know about something to do anything with the information. And then secondly, they got to be exposed to it enough, right? And then thirdly, we know people buy green candles, right? Not us. Everybody here is really smart.
I
So
sometimes bought green candles. I'm not. My hands are dirty, bro. My hands are dirty.
I try to give you.
It depends on did the
credit.
green candle come at 5 cents or did it come at 50 cents? Because that might determine what green candle I'm going to buy.
Right. Well, but here's a lot of things we deal with a lot of bias sometimes within our heads within the community, right? How many people come in will be a function of how many people know, how many times they've been exposed, and some other factors even right to the green candles. And just for I forget how far Richard's gone, but has he like quadrupled his reach during the bear market or doubled some ungodly number to 300,000, right?
The only number I know is that we had 69,000 followers for Richard back in 2020, and now we have 300,000. So in 3 years, he's like 5 or 6x.
So even if you said he only went up 25%, right? If you start using Metcalfe's law and some of these other things, you can figure out, right, what the possible network effects might be of just that exposure, right? We don't have to do the math on it, but it's just kind of saying, you know. So I do think it's gonna knock people's socks off once we get out there.
The one thing that some of us know that isn't talked about enough is like the guys that have a lot of economic energy in cryptocurrency that were anti-hex for years. They did sacrifice for PulseX. And some of them sacrificed for PulseChain secretly. And now we wait. And when the stuff's about to come out, they're going to start to talk about this stuff, and that's going to bring a lot of money into the ecosystem for sure. Yep. That's going to be a compounding, just crazy amount of new users coming in. And they'll be happy to buy at 50 cents because the way that works is it's called an expansion wave. When you get up to the all-time high, think about Bitcoin, what it did when we breached 20K last time. We went all the way to 69K. Think about Ethereum when you breached 1,400 last time, went to 5K. You know, think about that. Like in Hex's case, when it went to breach the 2-cent level, it came back down, retested 1.3, and then ripped all the way to 56 cents. That's when most people come in, is when the thing's going vertical and you're still clean on the parabola. So can go high. I know I've made a good case for how high it can go. So go back and check some of those streams out.
All right, dude. What else you want to see? You want to see anything else from my end? I always have more. But...
let's just tease, maybe we won't show it, but we'll just tease that we're working on a chart. Well, I think we could say that it's pretty much finished. That Chrispy and I are in Sloth are working on something. We can't say much about it. It's a suite of charts that is institutional grade content that for those large net worth people that are looking to get exposure in and want an edge on the market and want to know how they can get in safely and securely and be a big enough participant in the system at dollar price targets, but get exposure now and like know the roadmap for how we're going to get there. That we are building those tools out, and that to keep an eye out for any kind of product offerings that we'd be having to come in the future. A couple other things, maybe with my website, I got an event coming up. It's next Wednesday. I'll be streaming with Funding Gym, talking about
that'd be nice.
We'll be doing a little bit of a discussion on what bringing in institutional grade investors looks like for us. You know, and just basically it's a call to action for Hexicans to realize how many people want in but can't get in or don't know how to get in, or you know, have fears of getting in, but they want exposure and they have millions on the sidelines. And so we're here to help you guys that are out there like looking for that kind of exposure. We want to help you get in. We want to make you feel welcomed. And so if you were interested in that route, come and watch our stream on Wednesday. It'll be 3 p.m. Eastern on my channel. I have it, it's already set and everything, so you'll be able to find it. That's going to be a really good one. And, you know, we want to welcome you guys, like all the guys that want to get in with decent size, right? There's a lot of opportunity here. You know, one thing that keeps big investors away from Hex is, you know, maybe one thing was outrage marketing, but that's a side note, really. It's the liquidity, right? It can work for you and against you, but you need to know how the systems work, and you need to know how to leverage liquidity pooling and market making in cryptocurrency through DeFi. And so if you need help with that stuff, feel free to go to my website, schedule a consult. You know, I'm happy to talk you through it and make sure that you're doing it in a secure way. What else?
Awesome-licious, man.
I got a cool ass new presentation I'm working on cycle theory and hex cycle theory, and it gives I'm looking at it right now, but I'm not going to share it. But it's there is some pretty cool stuff coming as far as price action, and I can give you rough dates. But I used to give this stuff, you know, just out publicly, and it was great when it was used for the right reasons. But over time, it just, you know, it got used for the wrong reasons, and now we've been in a bear market, and now we're coming out of a bear market, and now I want there to be a safety layer between that kind of information and in the market, right? I don't just want bad users to be able to like game the system, so to speak. So if you're interested in that, I do private sessions. Chrispy's been on with me before.
Yeah, those have been a lot of fun. Yeah, because you're able to talk a little bit more about things in a non-public forum sometimes, you know.
Yeah, sometimes like a smaller community, you know, where there's like a little bit of a paywall, it protects the information and it protects the users inside so they can get meaningful exposure, right? And they can do it before the time runs out. Because if you look at the Hex chart, I'll pull it up. Yeah. Oh no!
Go!
I forget what I was going to say now, but just generally, it's an uptrend, man. It's an uptrend. So it's a race against time to accumulate, right? This is where we're going. If you guys missed my stream with the Beard the other day, super good stream.
The Beard.
the beard. He did my intro, and it's pretty cool. We figured out some cool stuff on this chart. So I'll pull up the chart so you can see what happened. Was first I'll point you to this. When we topped on Hex on the Hex WETH pair, the Uni V2 pair, the price wicked all the way to 60.6 cents on the 9th month of the year. And if you go back and you listen to that stream, we go in depth on the power of 3, 6, and 9. Hex's price actually Hex's coin supply inflates at a rate of 3.69% per annum as a base. And we went through and we described how Hex has found key levels of support and resistance at different levels of 6 throughout this thing. Keep in mind,
That was cool.
a hexagon is a 6-sided figure, right? And that 6-sided figure can fit 6 triangles inside of it, and each vertices is 60 degrees from each other. So to illustrate that for you, I really do want you guys to go back and watch this because it's good. But let me see if I can quick just show you what I'm. Because it's good to get a visual of it. Videos. Right. Right here.
There you go.
So you can see here, is this full screen on your screen? I can't see.
Not full screen. I can see you and it.
Okay, so
But good enough.
here's a hexagon. It's got 6 triangles in it. Each vertices is 60 degrees on each edge. So you get the power of 6. 3 vertices at 60 degrees apiece makes a triangle, and then 6 of those goes inside of a 6-sided figure, right? So the basics of this whole thing was like the mathematical power of 3, 6, and 9 and how that's coded into Hex. And so if you take that a step further and just look at the price action from the beginning of Hex, you can see that in the very beginning of Hex, we broke down, we caught resistance at 0.06 cents once, twice. On the third time, you came up, tested 0.06 cents as resistance, broke through it on the third time. We were met with 0.6 cents as resistance once, twice. On the third time, we broke through it, oscillated around that level, came back, tested 0.6 cents of support once, twice, went up on the third attempt, broke through the 1.69 cent level, tested 1.3 as support, ripped up through, consolidated sideways for 4 weeks, and on the 6th month of 2021, we broke through 6 cents and ran up to 60.6 cents on the Hex WETH pair before starting the bear market, and that was on the 9th month of the year. And then we broke down all the way down to this level here, came up, tested 6 cents as resistance once, twice, broke all the way down to 1.69 cents, caught the bottom there. Now we came up for the third attempt, busted through it. Now we're testing 6 cents as support. So currently we're oscillating around that 6 cent level. So it's like, you look at this data and you look at like how the underlying mathematical truth of life is built into all things. And this code that runs on the blockchain immutably is ran by 3.69% inflation, and it has meaningful significance in the price chart, how we've played with the 6 in the price chart.
That sounds pretty sexy. That sounds pretty good. Hey, there's meaning to those numbers and to frequencies and some other things. So, I mean, I get it. I get it.
So as we're speaking now, we're going up to test 6 cents. You guys can see here, we're at 5.978. We're about to break 6 cents as I'm talking about the 6. So anyways, there's got to be something to it, right?
That's right. Go Hex, go. Now now because you said that, I got to look at my own chart. I don't want to look at your chart. I want to look at my chart.
We got to make sure. We got to make sure. Do not trust, verify. You know what I'm saying?
Yeah.
We got a clean double bottom here on the top of the global downtrend in the bear market. So it's looking good, man. It's looking really good. Yeah.
Man, so FOMO'd up.
All right, guys. Is there anything else we want to talk about? What do you think? Is there anything else? I mean, I so badly want to show these guys this chart, but I just can't right now. Maybe we'll talk about it. On Monday night, I got a private stream with my group. We'll be going into a deep dive on some market cycle theory. Like last week was just like a tester. I gave you guys the Fibonacci time zones chart. This next week, I got like price targets, ranges, time frames, and the whole shebang. So it's gonna be cool.
Wait a minute. That sounds like actionable insight, like things you can do.
Maybe.
Okay, all right.
I can't speak too much to it.
All right.
I guess it's up for you guys to decide if you want to be a part of that. Make sure you go at least sign up for the mailing list. I got blogs coming out every week, and it's good stuff. The resource. Oh, I just updated the resource pages on here. I better show that.
So I get your, I don't know if I told you this. I get your mail.
Yeah. Are you tired
Because-
of the spam?
Yeah, because no, I get plenty of spam. This isn't spam. So I found it pretty cool that I'm getting those newsletters and all that stuff showing up in my my inbox, because I sign up with others too. Like I have some legacy stuff. Let's just say that that comes.
Cool. Yeah, man, I appreciate that. Yeah, here's we updated the Hex tools page, so now you got kind of like what hexnoob.com does. Shout out to those guys. This is just a tools index. If you want to see all of the cool tools for modeling ROIs on icosahedron, or you want to use any of these dApps. Like, this isn't for the hexagons that know this stuff unless you want to use this site to get to these places, but this is just a reminder of all the cool tools that we have in our ecosystem. Okay, and then we also updated the cryptocurrency tools page, so you got all these kinds of blockchain analytics software programs. Some are free, some are paid. Mining data sets, different centralized exchanges. This is all probably familiar for most of you. Different DEXs you can use. I really recommend a ramp for getting money into crypto. It's pretty nice. It happens fast. And then some different market analytics, wallet tools, liquidity tools, and on and on. So if you're into that stuff, we want stuff to look at, go there. That's all. You can just click the button. It's all free. So, and then the other thing was the book suggestions. We updated all this with all of this recent stuff that I've been reading over the last couple of years, and we go into blockchain trading, business and leadership, philosophy, and on and on. Law and international travel. This stuff's pretty interesting for those of you state nationals out there. You
have Hex books up there too?
Good point. I should probably put some Hex books. Yeah.
I was looking for mine, the sexy hexagon, but I don't see it up there.
Well, I better freaking check myself then and go get that up there.
Hey, that's a really good idea. I like that idea. You're always way ahead of me.
I don't know. There's someone saying that there's a S sound. I hope it's not too bad.
Oh, he's busting. I think he's busting my stones about me lisping. He doesn't know that I'm half deaf, and I don't want to explain that I can't hear very well. Yeah. Well, that you apparently you indulge me. You indulge me.
Well, it is what it is. You got a good appreciation.
That's all right. It is what it is.
So if you guys appreciate what Chrispy Man puts together, go give him a follow on Twitter. He just switched his tag to Hexfire.io. And go check out his website. Go join his Patreon. He's gonna have a lot more cool data coming. So, yeah, man, I just want to give you my thanks, appreciation. I know it's been a long one, and there's been a lot of dense information in here. And if you go back and listen, you're gonna find a lot of key information, and you'll be able to extrapolate out for yourself the kind of price targets we can hit based on the supply data that we gave you tonight. So, appreciate it.
Yeah, very good. Yeah, we could actually probably go for another 6 hours. I'm not sure.
6 hours.
Hey, listen, it takes a long if you do it. It takes a long time if you do it right. But we're not going to spend that kind of time, right? But I'd be pretty tired. But it's that kind of content. We have that much. Bad enough we were able to do it 3 times a week. So.
Yeah, well, I mean, check it out. We had this stream planned for 3 or 4 weeks before we actually set a date, and I'm glad we did, and I'm glad we got all this stuff out there for my viewers. It's awesome. I know a lot of our viewers are cross compatible, so to speak. A lot of people watch Maddie's stuff too. Shout out to Maddie on Game Theory.
Yeah, never cross the streams, man.
Yeah, that's true. You might get some on your hand or something. But, anyways, guys, I really appreciate you guys for coming to support us. It's been a long one. If you're still here, you're dominating. You're going to win this bull market cycle. And my last tool tip is keep your eyes peeled on next summer. There's some fireworks coming. All right.
1600X. Furu, wherever you are, clip that.
Please.